Hey everyone, and thanks for jumping back into the Cryptoverse. We are going to do another watch party because Bitcoin is now running the highs once again. We are now putting in a new all-time high. So what I'd like to do is, well, first I should probably post this to Twitter so people know that we are live. Okay. So, all right. So we're just going to go through all the different indicators again. It does seem like we're building up to a crescendo, but there's still a few things that haven't triggered yet, and so we will take a closer look at those. We are approaching 70K, right? So we're not that far. I don't think we hit 70K, did we? No, it looks like we went to 69,755. So we are getting pretty close to 70K. Bitcoin dominance is starting to move back up again. And remember, one of the things we've been talking about for the last several months is this idea. It could be wrong, right? I mean, again, strong opinions loosely held, but one idea is risk on until Bitcoin dominance hits 56%. And the reason why 56% is important is because the implication is that all Bitcoin pairs have broken down. But we're still not at 56% yet. But I would contend that 56% could come really quickly. I mean, it could even come this month, maybe next month. But I do think that we could be looking at 56% dominance within the next few weeks. I have no idea what price that corresponds to with Bitcoin USD, right? Because it's sort of a game of cat and mouse. Bitcoin goes higher, dominance goes higher, and then Bitcoin kind of stalls out for a few days, and then the altcoins rally with it. But Bitcoin, continues to take more and more market share as time goes on. And so that I think is what we're witnessing right now. And at some point, I imagine that Bitcoin should be able to break away from the altcoin market. And then in that sort of that final crescendo by Bitcoin USD, it should collectively break all Bitcoin pairs below their support levels. There you have it. Bitcoin is now at 70K. So that's certainly one for the record books. So let me, haven't seen that one before. So 70K Bitcoin dominance still less than 54%, right? So again, the implication is that there's that liquidity from alts that have to make its way back over to Bitcoin. The reason for that is because when Bitcoin, breaks higher, a lot of people don't want to miss out on the Bitcoin rally. And so what usually happens is they'll convert alts to Bitcoin, right? And so that's the whole idea. We've been talking about it forever. And I do just want to see it through. Again, I have no idea what that means for Bitcoin USD. It's just when we hit these certain milestones, like when alt Bitcoin pairs have broken down. And I mean, you can see that they have taken a bit of a hit today, but we're still at 0.44, right? We're still at 0.44. So, I think that the risk off signal, right, a big risk off signal for alt Bitcoin pairs would be that if this metric goes below 0.39, right? So below 0.39, I think it's sort of like the warning bells have started to ring. And again, I mean, I don't know. I don't know exactly what price that corresponds to for Bitcoin. You can see that Bitcoin has now had a pretty sharp pullback here. It's now about 3,000. It kind of reminds me of what happened when we hit 69K. If you guys remember when we hit 69K, let me go to the hourly time frame. We hit 69K and then we had a really sharp pullback, right? But what you may remember is that during that pullback, initially Bitcoin dominance went down, and then as it started to pull back more and more, Bitcoin dominance went up. So again, the altcoin market likes to party so long as Bitcoin shows strength. The reason why all this is important is because we must be aware of the type of run that we're in, right? And it's a QT one, not a QE one. And in QE bull markets, altcoins normally durably outperform Bitcoin, but in QT bull markets, altcoins normally durably underperform Bitcoin. So whenever you see that liquidity, over the last few days, we saw that liquidity go back into alt Bitcoin pairs. It flowed from Bitcoin to alts. Again, during QT, the implication, as always, is that the altcoin liquidity will just flow back to Bitcoin, right? And that's how you kind of play the game during a QT rally as opposed to a QE rally. In a QE rally, what ends up happening is Bitcoin dominance can go down as alt Bitcoin pairs gain on, sort of durably gain. But I still think we're in the phase of the cycle where Bitcoin dominance goes up, no matter the direction of Bitcoin USD, whether it goes up, down, sideways, you name it, Bitcoin dominance should go up as liquidity favors the least risky asset. It's the same thing with Nvidia. I mean, look at this. Nvidia has been on a moon mission for quite a long period of time. And a lot of that liquidity from all the other stocks, right? They're just making their way back over to sort of the ones that that have the most momentum, that are doing the best. So every once in a while, you will see sort of the Russell make some gains against, say, the NASDAQ. But when you zoom out, you can just see that they're still bleeding against the NASDAQ. A lot of micro caps are bleeding to Nvidia, just in the same way that a lot of altcoins bleed back to Bitcoin. So again, right now we are at 53.7% dominance. If we sort of zoom out here, one of the things you may note, and I think a lot of people sort of look at this dominance pattern and think of it as a distribution structure. And I don't want to completely rule that out, but I do think it's more likely to break up than down. I mean, it certainly seems like we're spending an increasingly more amount of time up near these highs as opposed to down near these lows, right? We're still kind of hanging out up in this region. And so I suspect that we are simply, sort of building up to some form of a breakout. And again, I didn't draw that perfectly, but just to give you the general idea, dominance is sort of slowly grinding higher on this false breakdown right there, right? A false breakdown, held support again. And, it's trying to break through here durably, but every time it does, it just gets rejected. So what really needs to happen is that Bitcoin needs to have a strong move either in one or the other direction, right? It doesn't have to be up. It doesn't have to be down. We've seen over the last couple of years that it has been up for the most part, or maybe not a couple of years, maybe like a year and a half. But Bitcoin, if it gets a very volatile move, meaning either 5K up or 5K down, there's a decent chance that it could eventually lead to sort of the dominance breaking through 54%. And that 54% level is crucial. Really, it needs to break above 55.33%, right? All the way up here, right? That's really where it needs to break through is 55.3, about 55.3%. So if you see dominance above 55.3 holding and then goes to 56, just know that at least last cycle, again, maybe this time is different, but at least last cycle, that marked the risk off dynamic, right? When we went to the 0.5 fib retracement on Bitcoin dominance, that marked it. We're not there yet, right? We're not there yet, but again, it could come relatively quickly. And again, if you look at a lot of altcoins, I mean, a lot of them are down today, right? I mean, a lot of these alts are actually down today, despite the fact that Bitcoin is up 2%. And so what we're going to do is we want to take a look at all the other different things and see if other indicators that we've talked about have been triggered yet or not. And so some of them have, and some of them haven't. So one of the ones that has not yet is blue chip dominance. So blue chip dominance, if it breaks 73%, it would imply durably, that alt Bitcoin pairs are really starting to break down. But at this point, it hasn't broken 73%, right? 73% has been a crucial level for blue chip dominance for a long time. And it has marked turning points in the cryptoverse, right? It's marked turning points in the way that alt Bitcoin pairs behave. When that 73% level is sort of crossed, either from going beneath it to over it, or over it to sort of beneath it. So again, I know 99.9% of you don't give a you know what about Bitcoin dominance and blue chip dominance and alt Bitcoin pairs. All you really care about are alt USD valuations. But I've said for 2 years now that Bitcoin heavy crypto portfolio is likely going to be a lot better than an alt heavy portfolio, because Bitcoin should reclaim a lot of that market share and it should hit new all-time highs first. A lot of people will continue to say that there are plenty of micro caps that have outperformed Bitcoin, but a lot of those are well below 100 market cap. And I would like to think, I know you guys aren't going to buy it, and I'm not asking you to, but in my own opinion, there is a difference between, say, like the top 25 to 50 cryptocurrencies and the altcoin casino that runs tens of thousands of cryptocurrencies that in mania phases can pump like 50x or something because they're being promoted by every influencer that's getting paid off to promote it. But then they also are the ones that tend to go to zero over the longer haul, whereas Bitcoin and even Ethereum and a number of the other alts that are sort of much higher up, they tend to stick around. And so I think it's worthwhile to consider that there's a difference between sort of the core selection in the cryptoverse, say like the top 10, 20 coins, and the altcoin casino that spans tens of thousands of cryptocurrencies, when most of them are ERC20 tokens that a seventh grader could have programmed last Tuesday, paid an influencer to promote them, they go up 20x because there's no liquidity in them, and then they crash next week. So I think there's a big difference in that. So please do not mistake the Bitcoin dominance trend with the idea that these random altcoins can't pump. They can, but one of the things that I posted this to X recently. It is the heat map. So we actually have the heat map now. So this is basically based on the US dollar. So you can see, over the last year, this is what the cryptoverse looks like. It's mostly green. Imagine, there are probably some people that went YOLO'd into some of these ones that were red. But I mean, all things considered, over the last year, you could have thrown a dart at a board with the top 200 cryptocurrencies and you made money. But what you notice is that Bitcoin has outperformed most of these. Now, that's not necessarily obvious when you just look at it like this, but when you switch the reference from the US dollar to Bitcoin, what do you notice? You'll notice here that a majority of the cryptoverse has bled to Bitcoin over the last year. So on any given day or week or month, there's always an altcoin pumping against Bitcoin, but it tends to be a rotation from one type of altcoin to another class of altcoins, and so on and so forth. So I think a lot of times people don't like to get on board with the Bitcoin dominance train because at any given time, there's a handful of altcoins that are pumping against Bitcoin. But when you take a step back and look at the entire year, it's pretty clear that most of the cryptoverse is just simply bleeding back to the king. I don't know what the count is today. Maybe we should have a little counter that shows the number of green versus the number of red. But when I counted them up yesterday, only 39 cryptocurrencies over the last year have outperformed Bitcoin in the top 200. Now, I'm not talking about the top 20,000. I don't really care about the random altcoins out there. But out of the top 200, only 39 had outperformed Bitcoin over the last year, and representing less than 20%, right? So 40 out of 200 will be 20%. So 19.5% of the cryptoverse, assuming the cryptoverse is only the top 200, 19.5% outperform Bitcoin. If you held one of those over the last year, congrats, right? I mean, there's always some that outperform Bitcoin, but Bitcoin has been the safer place to be because not only has it outperformed more than 80% of the top 200 cryptocurrencies over the last year, it was a lot lower risk than holding those. Because again, let's say you just picked out a basket of 10 different altcoins. You only had, you had a relatively small chance of actually outperforming Bitcoin if you were just sort of randomly picking, right? If you were basing it on something else and you felt like you had some alpha and that this was going to outperform, then that's different. But if it was just, say, like a a random basket of altcoins over the last year, it would have been harder to outperform Bitcoin, at least when you look at the top 200. Now, if you go cherry pick October, or if you look at various points, yes, Bitcoin dominance has not gone up as much. I mean, you can see essentially that basically since October, dominance has stalled out a little bit, right? It hasn't really made that move durably to a new high. And so whenever I talk about this stuff, people say, well, just wait 6 more months. Guys, yes, eventually alts will start to durably outperform Bitcoin. All Bitcoin pairs will start to go up. But maybe that could also be at a very different phase of the cycle as well. And we can talk more about that later. But what if 6 months from now, the people that are saying that wait 6 more months and show us this, what if 6 months from now it's even more red as Bitcoin dominance continues to break out, right? I mean, it certainly looks like it's building up to a crescendo here, and it certainly seems like it wants to break out. So what if in 6 months the chart looks even more red as more altcoins just continue to bleed back to the king, right? So again, I mean, in the short term, we, again, looking at Bitcoin USD, it's currently trading around 68K. If you're new, we just got to 70K earlier today. We're going to go through a lot of different metrics that I think should be on your radar. I will be the first to tell you, I cannot predict where this thing is going to top out. And anyone who's followed me long enough knows that. I can't predict that. All I'm looking at are these indicators that previously marked a change from risk on to risk off for 3 to 6 months. Okay. And if we can try to stay rational, which I know is hard, right? If we can try to stay rational, then I think it would be worthwhile to continue to sort of look at those indicators, right? So the first indicator, as I said previously, is dominance going above 56%, right? So 56%, I think that would be a warning sign. We're not there yet. The reason for that is because, again, last cycle, once dominance retraced to the 0.5 fib, that is where Bitcoin USD started to show a little bit of pullback, right? It started to pull back a little bit at that time. Again, could this time be different with the spot ETFs? Guys, anything's possible, right? Anything's possible. But I mean, it does. It's just sort of like a reminder. Let me pull this up on a Right. Yeah. So I mean, it's just a reminder, right? It's just a reminder that when we crossed the 0.5 fib last cycle, that was where Bitcoin finally started to cool off for about half a year. Again, we're not there yet because the 0.5 fib retracement from that level is about 56%, right? I mean, I'm looking at it on the let me actually take it all the way up to the wick, right? So it would correspond to about 56%, right? We're not that far away, right? I mean, again, I know it seems like we're far away right now because we're at 53.5%, and that's a full 2.5% away. But we can move a full percent in a day, right? If you were to go look at dominance, look what happened over here on March 3rd, right? We were at the same valuation. Dominance was at the same level that it is right now, and then by the next day, it was all the way back up to 55%. Right. So we've seen that, right? We've seen that many times. And also over here, dominance came all the way down to 53.6%, and then it spiked up as Bitcoin dumped to 55%. So again, while it tends to be Bitcoin rallies that break all Bitcoin pairs down, it can also be Bitcoin drops, Bitcoin dumps that could break them down as well. So the first thing is to say, well, look, we haven't yet reached the 0.5 fib retracement on Bitcoin dominance. Therefore, it implies that there is some liquidity in the cryptoverse that should make its way back over to Bitcoin. You also do, of course, have the spot ETF flows, but I still think because of that, dominance should go higher. And anytime I see these altcoins rally on their Bitcoin pairs, the first thing that comes to my mind is just, all right, well, that just means there's more fuel for Bitcoin to sort of grab from the altcoin market. Because again, it's a QT phase, not QE. So that's number one is Bitcoin dominance not yet at 56%. A derivative, I mean, Bitcoin or blue chip dominance still needs to get above 73. And actually, we did go above 73 this week. In fact, right? We actually, the last couple of weeks, blue chip dominance has gone above 73%. But what's the key thing, right? You need a weekly close, right? If it's not a weekly close, I don't want to hear it. It needs to be a weekly close for it to really mean anything. It's kind of the same thing about, like Eth-Bitcoin, right? If you guys remember Eth-Bitcoin, what did I say back in January? What I said back in January is that it doesn't mean a damn thing if you don't actually get a weekly close below 0.049. And the issue for Bitcoin back then, to continue going up in the short term with dominance, is that a lot of times Ethereum will show some renewed strength on its Bitcoin pair in Q1. And right, so if we're not able to close below it, which we were not, right, you kick the can down the road, right? And so Ethereum gets this rally back up. This sort of trend line is sort of the same trend line it's been respecting for a long time. And now that trend line that used to hold support now seems to be holding some form of resistance. And so if this plays out, kind of like last cycle, where you sort of came down here, you put in a low. I mean, it's almost the same thing, right? You put in a high, you go just below that 20-week SMA, you put in a lower high. I mean, it's the same thing almost, right? So I guess the question is will Eth-Bitcoin slowly bleed back down to the range low? So that would be another thing to look for a potential shift in sort of market dynamics, market sentiment, would be that if Eth-Bitcoin durably goes below 0.049. Again, there's no guarantee that it does, but we have seen this pattern play out on more than one occasion before. Here was another occasion, a very similar pattern: peak, low, peak, revisit the low, bounce, and crash below. Peak, low, peak, revisit those lows, bounce, and then crash, right? Peak, low, peak, revisit the low, bounce, and then I'll let you fill in the blank. Again, I could be wrong. It could be, but that's what I would be. That's another thing I'd be looking for. I'd be looking for a weekly close by Eth-Bitcoin below 0.049. And as long as Eth-Bitcoin is above 0.049, it still implies that there is liquidity that Bitcoin will take back, right? That's the implication. Again, could this time be different? Yeah, it could, but if we're just basing it on historical trends by Eth-Bitcoin, especially during QT, the implication is that liquidity from ETH will make its way back over to Bitcoin, and then Bitcoin will use that as fuel. So again, with Eth-Bitcoin still at 0.057, I still think that it's likely going to bleed back down. And if you look over here in 2019, which by the way was also a year that rate cuts began in the summer, which is coincidentally something that's likely going to happen this year, what you'll notice is that Eth-Bitcoin, it had a bounce. It found a low sort of in February. This low here was in February. It then bounced again in late February, and then it just sort of slowly bled back down through March and April. So I think it's worth keeping an eye on Eth-Bitcoin as another potential indicator for Bitcoin USD. So that's another indicator I think we should look at, right? So again, it's all about where does the fuel come from, and Bitcoin, I suppose, is getting its fuel from three places: spot ETFs, altcoin liquidity, and the people that are just regularly DCAing it no matter what. So those are the three main places. And as long as alt Bitcoin pairs remain elevated, then that is at least, one sector of the cryptoverse that Bitcoin can pull that liquidity from. Now, I want to talk about a few other things, right? And I'm not going to spend a lot of time on it because I know most people don't care about gold. But again, gold is breaking out here. I mean, could it be a false breakout? It could. It's had plenty of those. So I wouldn't put it past it for it to be a false breakout. But at this point, it looks pretty believable. I mean, it really does. If you look at gold, this looks like a fairly believable breakout by gold here. I mean, it's, what I was saying a couple of weeks ago was, once gold puts in weekly closes above 2070, then you should look for some type of crescendo by Bitcoin USD as it goes to 56% dominance. Now, it seems like we're getting these weekly closes by gold above 2070. Hell, we're now at 2170, right? It's the price of gold is now at 21.74. So it's a full $100 higher than the breakout point. So that's sort of another area of confluence. Well, this has already happened, right? We've already seen gold break out. And the only thing we really know about how this has behaved with Bitcoin before is, I mean, unfortunately, Bitcoin doesn't have as long of a history, but previously, when gold broke out, Bitcoin had had another week or two before it cooled off, right? Another week or two. So I'm not saying that, I'm certainly not saying that it can't go higher. We just saw Bitcoin print 70K earlier on the stream, right? So it's been clear that even after gold broke out, Bitcoin has still gone higher, right? It's pretty clear that, it can do that. And that's exactly what it did in 2019 is gold broke out. So gold was putting in new highs. It wasn't new all-time highs, but it was new highs, in any recent time. I mean, you'd have to go all the way back to 2014, right? It was new highs for the first time in or it was a higher price than gold had seen for the first time in 5 years. And after that happened, Bitcoin was also going manic, and dominance was going up for another week or two, and then the crypto space kind of cooled off. So I wonder if that's kind of repeating, where Bitcoin sort of entering it's not just entering, right? It's been this manic period for a while now. And as it goes up, it breaks those Bitcoin pairs off support, right? So you have gold breaking out still. It seems like it's still durably breaking out. You have Bitcoin also putting in new all-time highs. And the main difference between this and 2019 is that Bitcoin was not putting in all-time highs. So in that case, there was not a lot of retail coming back because Bitcoin was not at all-time highs. This time, though, there is some element of retail coming back because Bitcoin has put in new all-time highs. I mean, look at the social risk, right? It's back up to 0.35. This is a higher high on social risk, right? We haven't seen social risk this high since late 2022. So there are certainly some retail traders coming back into the space. You can also see that by going and looking at YouTube views. If you were to say take a 30-day moving average of YouTube views, you can see that there has been a surge recently, and maybe it's better captured by a 7-day moving average, right? Over the last few days, there certainly has been a surge of new viewers into the Cryptoverse. So you're sort of seeing retail return, right? Retail's returning precisely at the same time that Bitcoin is putting in new highs, which is what normally happens. But like 2019, it's occurring during quantitative tightening and high rates. And it's also occurring potentially just a couple of months before the first rate cut. So again, this is not 2019, but it's also not 2020 when we had QE. It's a combination of the two, right? I think this cycle is honestly, I think it's throwing us a curveball. All cycles throw us a curveball in some way, but it's throwing us a curveball in the sense that it's still during quantitative tightening and it's still during high rates like 2019, but we're putting in new all-time highs like 2017 and 2020. So in that sense, it's important to sort of keep in mind all these different indicators that we've been talking about. Another thing that is worthwhile to consider, there was another, what was that other? Yeah, it was USDT dominance. So let's go take a look at USDT dominance and see where that is, and see if it's and again, if you're not familiar with this, we did a whole video on USDT dominance a number of weeks ago. I know it was when we did it basically late January. I know that's when it was because I made the video at the same time that USDT dominance hit its bull market support band. And I said back then, because again, when you're in the heat of it, right, when you're in the middle of it and emotions are running high, it's hard to navigate. But go back and watch that video, when Bitcoin had just gotten rejected off 48K. I think it was at around 39K or something when we made the video, around 40K. And I said, look, guys, if as we go into the halving, as the halving approaches, if Bitcoin rallies into it, just like ETH USD rallied into the merge, then there's a chance that USDT dominance could go back down to the trend line. Now, again, I will be the first to say, diagonal trend lines are essentially made to be broken over a long enough period of time, right? Over a long enough period of time, I would expect this trend line to be broken, right? I don't think USDT dominance is going to go up forever. So there's that consideration that has to be made. And so the question is well, is this the time that it actually gets broken? Given the spot ETF flows, maybe it's not as important. But what if this time is not different? What if this time is not different and we're hitting the trend line at the same point when we hit it previously at fairly significant points in the cryptoverse? Again, Bitcoin could still rally, even above 70K again and still go, simply go down to this trend line. Again, you can adjust the trend line and it still make perfect sense. Also, if you had a correction in the cryptoverse, kind of like we just had, and then Bitcoin rallies back up to 70K, all USD pairs might be lower. So USDT dominance might still be at 4%, even if Bitcoin USD goes to a higher level. Another fascinating metric to look at is to actually add in USDC dominance to that chart, and you'll see a very similar trend line, which we're essentially at right now. I mean, again, I haven't connected the dots precisely, but if you do, we're really not that far away from it. So the other thing to look at is all this plus Bitcoin dominance, because again, there's certainly the prevailing sentiment that Bitcoin dominance can't go up because all these stablecoins. And actually, what I want to do, let's just first look at Bitcoin dominance plus USDT dominance. So when you look at Bitcoin dominance plus USDT dominance, what you'll see is that it's currently at 57.5%. And you might say, well, Ben, it kind of looks like it's putting in lower highs, right? And you're kind of right? It has been putting in lower highs. But I kind of think that it's this rally into the first rate cut that we're getting, which is similar to the lower highs over here from 2019. So sort of the suggestion is that if Bitcoin can break away from the altcoin market, right? Like if it can truly break away and leave altcoins behind, then you could get a strong move by Bitcoin dominance plus USDT dominance, where it breaks through this, right? I mean, it did the same thing right here. And in fact, when it broke through was in April of 2019, almost exactly 5 years ago when that happened. And so I would be looking for that. If Bitcoin comes out with a strong move on its USD pair, the closer we get to the halving, look to see if this metric also breaks up. Because that would certainly be sort of a telling point for the cryptoverse if the Bitcoin dominance plus the USDT dominance can break to the upside. But so far, it hasn't been able to do that, right? It's still putting in lower highs. And of course, everyone who's looking at altcoins is going to point out those lower highs. But again, we saw the same exact thing going into rate cuts at during the last cycle, right? You had the first rate cut here in July, and sort of just leading into that first rate cut is where the Bitcoin dominance plus USDT dominance really started to break higher. So essentially what it was like a panic rally into rate cuts. And I think that's essentially what we're witnessing once again. It's sort of like a panic rally into the first rate cut. Now, again, when will the first rate cut occur? I have no idea, right? I have absolutely no idea. But if we at least look to see what the market is currently thinking, you'll see that there's about, there's only a 22% chance that it doesn't come in June, right? Or that we don't have a rate cut by June. And I could certainly see a rate cut by June. You could even have a rate cut by May if the unemployment rate next month comes in at 4%. Remember, 4% is that critical threshold where I've said before, I think at 4%, I think the market starts to pay attention to the labor market. But until then, the S&P likes climbing the wall of worry. Remember, the S&P climbs the wall of worry. It generally trends higher until it has a sufficient reason not to do so. And the two main reasons that it wouldn't, well, there's three reasons: inflation going up, unemployment rate going up, or a geopolitical event. Now, I can't predict geopolitical events at all. Not at all. And I don't intend to try, right? So I just kind of ignore it. I mean, I'm not going to base my entire investing journey based on geopolitical events that I have no hope to control. So then it leaves the other two, right? It leaves the other two options. And one of those is inflation. And so let's go take a look at that. One of those is inflation. And if you look at inflation, some people say it's going back up. I don't really see that right now. I mean, I see it as kind of going sideways. This is headline inflation. It is still going sideways. And the fact that it's going sideways means the Fed can't cut. So has it gone up? Has it gone up? Not really, right? So because it hasn't really started to go up, guess what? The S&P keeps on climbing the wall of worry, right? It just keeps on going up. Inflation isn't going back up, right? So if inflation is not going back up, it doesn't really, we probably don't really need any more rate hikes. It just means that the Fed needs to stay at the current levels for a longer period of time. So the market's kind of the wall of worry as long as inflation's not going up and as long as there's not some type of major geopolitical event, which leaves the third thing, and that's the labor market, right? That's the labor market. Now, we did just get another print today of the unemployment rate, but it came in at a new high for the cycle at 3.9. You might say, well, hold on a second. I remember 3.9 hitting previously, right? I remember 3.9 hitting previously, and you'd be right, but they revised it down to 3.8. So this is now a new high for the cycle, 3.9, but it's still not 4%, right? It's still not 4%. And so again, you know, the market, the S&P, and again, the crypto space kind of behaves in a different way than the S&P, but the S&P, I think, will start to take notice at 4%. But until that time, it loves climbing the wall of worry. If you take a 3-month moving average, you can see that it had been sort of trending back down for a little bit, and now it's starting to go back up. So that's what I would look at. There's those three things. One of them is completely impossible to predict. Inflation to me seems like, I know it's not popular to say this, but I really do think that inflation is coming back down. It's just taking a long time. And if you look at inflation per category, one of the main reasons it's just so elevated is because of housing, right? Especially if you look at like the year-over-year contribution per category, the reason it's so elevated is because of the housing market, right? If you go look over here and you just look at housing, this is the reason why it's so high, because, you know, essentially 2.07 of the 3.11 contributing to headline inflation is just coming from the housing market, right? So I think inflation is going to keep going down, is my base case. I think it will keep going down. I mean, it might be sticky at 3% for a while. And the reason why that's a problem is because of when rate cuts arrive. It depends what risk assets do. It depends on why they've arrived, right? It depends on why risk asset or why the rate cuts have arrived. If the rate cuts arrive, like in 2019, look at 2019 when rate cuts arrived with the S&P 500. If rate cuts arrive in 2019, like they did in 2019, without really a lot of weakness in the labor market, then the S&P continued to climb the wall of worry. Right? It just continued to climb because there wasn't any real fear that the labor market was showing any weakness. And you can pretty clearly see that with the unemployment rate back then, right? The unemployment rate was trending down. And so when the Fed cut rates, stocks went higher because the unemployment rate was going down. And the Fed was just basically saying, hey, market, here's a gift. Here's looser monetary policy. You don't need looser monetary policy because the unemployment rate's going down, but we're going to give it to you anyways, right? So the stock market climbed the wall of worry. But there's other examples in the past where the stock market does not climb the wall of worry after rate cuts arrive, right? Here's an example of rate cuts, and the market did not climb the wall of worry. The market collapsed in 2008. Here's another example where rate cuts arrived and the market was going down. And the reason in both of those cases was because the unemployment rate was going up, right? The unemployment rate was going up right here, and it was going up right here. So while you had rate cuts, while you got rate cuts back then, it wasn't bullish for the stock market because the labor market was folding. And so the hard part for the Fed, I mean, if you heard soft landing and hard landing, the hard part for the Fed is that they can't cut, because if they cut, there's a chance that our animal spirits are just going to run absolutely wild. They're already running wild, right? So they feel like they can't cut because inflation is still not durably going to their target of 2%. And the reason that slowdowns in the economy occur is because the Fed makes a policy mistake. It's a policy mistake. And it's so hard to know. The correct thing to do right now might very well be to cut in order to secure a soft landing, right? That could very well be what they should have done at the last meeting. The problem is that with monetary policy, there are long and variable lags. So by the time they know the effects of all these rate hikes, and then they see if they start to cut because they see weakness in the labor market, it's too late, Okay. So if we get rate cuts later this year and the unemployment rate is still below 4%, then that could be bullish for, for risk assets. But if the unemployment rate is already above 4% and trending higher, rate cuts probably aren't going to do a damn thing to save the labor market. Not unless they cut, 500 basis points and basically just take us back down to zero, which they're probably not going to do because they don't want to run into the same issues that they ran. I mean, that would probably lead to another wave of inflation and a repeat of the 1970s. And we don't want that either. So there's definitely a lot of things to consider here as it relates to Bitcoin USD. So the other thing I wanted to mention with Bitcoin USD is there's some other things we can look at. Not only is there the liquidity in the altcoin market that it's slowly taking away from, and again, what you're looking for is total 3 minus UST divided by Bitcoin. I would encourage you to if you have TradingView, I think this is a very important metric to keep kind of in your watch list. And the reason is because when it breaks down, that's not a good thing for altcoins, right? That's not a good thing. Now, there is an example in 2016 where Eth-Bitcoin broke down and Bitcoin continued to rally, right? So we have to remember that there's a chance that that could happen too, especially with the spot ETF stuff and especially with all the mania phase. I mean, look at what Nvidia is doing. Who am I to say that Bitcoin can't, do something like that? But the point is that in all these cases where all Bitcoin pairs broke down, whether it was 2019, whether it was Eth-Bitcoin in 2016, in those cases, altcoins took a big hit regardless of what Bitcoin did. So in one of those cases, Bitcoin kept on going parabolic. In the other case, Bitcoin started to show weakness like in 2019. But in both of those cases, regardless of what Bitcoin USD did, when alt Bitcoin pairs broke down, altcoins took a huge hit and they bled back to the king, right? So when you look at alt Bitcoin pairs, you can see there's been a fairly well-defined range here that goes between 25% and 100%. So essentially what I'm saying is that when altcoins reach 100% of Bitcoin's market cap, you should be running for the hills. And when they reach 25% of Bitcoin's market cap, there's a good chance they're bottoming out on their Bitcoin pairs. Right now, we're at 44%, right? So we're basically at the same level that we were back over here just before the first rate cut arrived. Right? We're at the same level. 44%. This was right before the first rate cut arrived. And so what I'm suggesting is that, again, we can look at rate cuts probabilities all we want, but this stuff changes every single day. What I would be looking at is if and when alt Bitcoin pairs put in a weekly close below 0.39 or below 0.4, meaning 0.39 or below, I think that means that potentially at the next meeting, the Fed's cutting. It could be another meeting after that because of this inflation issue. But I think that when alt Bitcoin pairs close below 0.4, I think the Fed is going to cut soon. Now, that doesn't mean that the Fed cares about your altcoins, I'm sorry to say, but what it does mean is that it's starting to break the retail consumer, right? They're not able, the breadth is narrowing so much that everything's just basically flowing into one thing. And in the stock market, it's basically just flowing into Nvidia and like Microsoft and Meta. In the crypto space, it's been mostly Bitcoin. But when that happens, that's sort of a signal that potentially the Fed needs to go back to looser monetary policy. And when that happened last cycle, that's exactly what they did. They went back to looser monetary policy when alt Bitcoin pairs broke down. Again, they don't care about alt Bitcoin pairs, but I'm suggesting that altcoins are a lens into the health of the average retail investor. That's what I'm kind of suggesting, right? Because we're all degens at heart, even the most maxi people. I think there's part of them that, look, we're all degens at heart, right? Everyone wants to see their portfolio go up a lot. But that's what I'll be looking at are these alt Bitcoin pairs. And again, right now it's still at 0.44. So you still need to see it drop down to 0.39 for it to really have that meaningful signal. And with total 2 minus USDT divided by Bitcoin, you need to see it really go to 0.69. And right now it's at 0.79, meaning there's plenty of room there for it to ultimately drop down. And again, it could be, history shows that it tends to break down in a Bitcoin rally, but there's cases where it has broken down on a Bitcoin dump, right? Like that's happened as well. So I think it's important to remember that and to say, look, it doesn't have to be one or the other. It's just that when that happens, that could be, sort of a dynamic. There's one other thing that I was actually looking at recently, and that was the running 1-year ROI of Bitcoin. So if you look at the running 1-year ROI of Bitcoin, it's currently at 3.33. So if you draw an imaginary trend line through these peaks, what you'll notice is that in the last cycle, when it hit that sort of imaginary trend line, it marked a local top. Now, it was not the all-time high for that year. We went to a higher price later on that year, as you can see, but it ended up being a lower high on the 1-year running ROI. We are getting pretty close to that threshold. And the reason why we're getting so close to that threshold of that imaginary trend line is because if you look at what Bitcoin was doing exactly 1 year ago, it was capitulating, right? So that 1-year ROI is going to continue to go up for the next 2 days. And the reason is because it's March 8th right now. And if you go look at what was going on in the cryptoverse exactly 1 year ago, Bitcoin was capitulating into March 10th. And so the running 1-year ROI will go up for the next 2 days, pretty much regardless of what Bitcoin USD does, unless Bitcoin gets a huge crash, right? If Bitcoin gets a huge crash, then it's possible to run the 1-year ROI is already topped out. But we know that on a year ago, Bitcoin USD had a huge drop of about 6 or 7%. So we're comparing that 6 or 7% drop then over the next day to the rally by Bitcoin that we're getting now, where it's been rallying up to these new highs, right? So that's why the running 1-year ROI is getting pretty stretched here. And you can imagine a sort of an imaginary trend line. We're getting pretty close. And so that's sort of why I've been saying I do think, I could be wrong, right? I get so many things wrong, but I do think that we could certainly get a cool off period, as especially after the halving, right? You could put in some type of high in March or April, and then following the halving, we kind of cool off for a while. We see where the labor market's going, if the Fed can engineer a soft landing or not, and then from there, then the market decides where it wants to go. If that doesn't happen, right? If there's no cool off period in the next month or so, and or sort of following the halving, then I would be on board with the idea of more like a translated cycle peak, right? Because if you don't get a cool off period and the Bitcoin risk, right? If you go to the Bitcoin risk, if the risk just simply goes back up into the highest risk bands, then history shows that usually after it goes to the highest risk bands, it then goes to the lowest risk bands. Now, 2013 is an example of sort of the opposite of that, where, I mean, it did go back down to 0.3 risk, but it didn't go all the way back down to 0 for a while. So, you could repeat something like that. But right now, Bitcoin risk is at 0.711. In 2019, Bitcoin risk peaked at around 0.685. In all the other cases, in all the other parabolic rallies, Bitcoin risk peak somewhere between 0.8 and 1. So again, I think it's kind of a combination of this peak where we put in new highs, but also the 2019 peak during tighter monetary policy than we saw in 2020. So I do think the running 1-year ROI is relevant. We are getting relatively close. If we were to go look at the extension from the 20-week moving average, so if we go look at the bull market support band, there's this idea of how far can we extend above the 20-week moving average. And one thing we can do is we can look at the short-term bubble risk, which is currently at around 51, meaning we're about 51% or so above the 20-week moving average. If you scroll out, you can see that every peak above the 20-week moving average seems to diminish somewhat, right? It's not a perfect line there, but you can kind of see how from peak to peak, the extension from the 20-week moving average is sort of slowly going down. The way that we can capture that in a way that a trend line could be useful is to take the natural log of the price over the 20-week moving average. And if you do that and you connect the dots, right, then it all makes a lot more sense, right? You have this peak, and then you have that one, and then you had sort of a double peak right there, and it kind of looks like we're approaching it once again. Now, again, I don't know exactly where that could go. It depends on how you draw this line. If you draw it a little further down, you could already argue we've hit the peak. If you're a little bit more loose with the way you draw the line, it implies it could go higher than the current levels. But it really just comes back to, kind of how you draw it. And right now it would correspond to potentially, around that 0.5. I mean, again, it's hard to say because it depends on how you draw the line, but maybe around 0.5 or so. Now that's different than we talked about this last week, but the 20-week SMA has changed since last week. So if we do a little bit of back of the envelope math, we can figure out what the price of Bitcoin would be if it tagged that trend line, at least the way I drew it. Again, a counterpoint to all that is you could easily draw this trend line to fit this peak, and then this peak right there. And you could already argue that we're at the trend line right now. And everything I'm about to say is completely irrelevant, and we're already there. And the hopes of going higher might just be a pipe dream. But if we were to extend a little bit higher and go to say 0.5 on this metric, then all we have to do is we take the natural log of X divided by the 20-week SMA equals 0.5. Now, then all we have to do is go figure out what is the 20-week moving average right now, and it's currently at around 44,300. So if we go plug that in, 44,300, and we just simply solve for X, that would give you a price of $73,000. So again, will Bitcoin go to 73K? I don't know. I really couldn't tell you. Last week when we did this video, after Bitcoin hit 69K and we had a huge drop back to 59K, I think a lot of people were discouraged by that, and saying, well, maybe that's the top. And now here we are. We put in a new high. So again, I don't know if 70K is going to be it. I believe ETH hit 4K. No, ETH still has not hit 4K, at least not on this exchange. It might have on some exchanges, but it really depends on kind of like, how much longer, how much longer can the clock tick, right? How much longer is it until alt Bitcoin pairs break down? Gold's already breaking out. How much longer until ETH Bitcoin breaks down? How much longer until blue chip dominance breaks up? How much longer until USDT dominance finds a floor? And it feels like we're going into this crescendo. And look, the party's over at midnight. I don't know if it's midnight right now, or if it's 9 o'clock, or if it's 6:30. But again, it's just something to think about, right? It's something to think about. And again, I mean, we are certainly getting high. The other thing to look at is the fear and greed index, right? So the fear and greed index is something we've talked about extensively, as being a potential thing to sort of keep in mind, and note that the fear and greed index, it already went into the 90s, but then it actually came back down after it went into the 90s. It actually came back down to 75, and then it sort of bounced back up into the 80s. Now, I was going to suggest that it might go back into the 90s after today because Bitcoin just ran to 70K. But if Bitcoin does not go back to 70K by the end of the day, or even if it does, the fact that we pulled back by about $3,000 might suggest that, it could take a little bit longer for the Bitcoin fear and greed index to get back into the 90s. And again, if you look at the fear and greed index and you color code it by just when it's between 90 to 100, we just hit that point not too long ago. And there's only 2 times in history where we really ran the 90 to 100 phase. And one of those examples was 2019 during QT. The other example is 2020 during QE and new all-time highs. I think it's a combination of the two. I think that, you're probably not going to see something as extravagant as that. But I mean, we've already gone and put in new highs even after the fear and greed index hit 90, which is different than what we had in 2019. So again, I'm going to stick. That's my story, and I'm sticking to it. I think it's kind of a combination of sort of the 2019 QT rally and the 2020 QE rally, right? You're putting in new highs, but you're also fighting tighter and tighter monetary policy just because the Fed's holding for longer and longer. So one of the things I would be looking for is for Bitcoin to continue to suck that liquidity from the altcoin market over the next few weeks. And then once that liquidity has been sucked out, and once once those Bitcoin pairs break down, then we might see Bitcoin dominance go into a topping pattern, right? And again, I mean, everyone's called the top on Bitcoin dominance for the last 2 years, but we've seen dominance has been very, very resilient as liquidity flows back to the king. And this is why I've said for 2 years now, Bitcoin heavy crypto portfolio is a pretty good option. I'm not saying that you can't make more money going into the depths of the cryptoverse and looking at, you know, the coins that are 10,000 market cap or whatever, but it has been a fairly good option, especially for risk averse people that want exposure to crypto. They want exposure to the upside of crypto while minimizing your downside risk. Because if Bitcoin does, you know, get a correction after the halving, you know, what happens to alts? I mean, you know, does, like, a lot of them are nowhere near their all-time highs. Now, again, I mean, maybe they run them, but that's the thing in 2019 is like Bitcoin went up a lot, altcoins went up some, and then Bitcoin came back down, and then altcoins went much further down. So, you know, with altcoins still very far away from their all-time highs, there's sort of two camps. There's the one camp that thinks that they're going to make it to their all-time highs collectively. There's the other camp that's just saying, look, this is why you should have been in Bitcoin over alts, is because Bitcoin hit its new all-time high well before most of these altcoins. Even Ethereum, right? I mean, even all the ETH maxis who've given me a hard time for the last 2 years for saying ETH Bitcoin's going down. Here's a perfect example of, once again, Bitcoin hitting a new all-time high before Ethereum does. So once again, showing why sticking with the king during bear market years, pre-halving years, and even the early part of halving years makes a lot of sense, right? Because Bitcoin leads the market. Ethereum does not. Solana, Cardano, Polkadot, Avalanche, they don't lead. They don't. They are along for the ride. They are bus riders, right? Bitcoin is the bus driver. The other ones can pretend to be bus drivers, but they're not. They're bus riders. They're only here because Bitcoin's driving the bus, right? So Bitcoin drives the bus. The altcoins hop on for a ride. You can make money in the altcoin market if you're careful and you remember to occasionally take profits back to Bitcoin. If you think about Bitcoin as your unit of account, right, as your standard. But if you fail to do that, what will happen is that the altcoin will collectively bleed back to Bitcoin over a long enough period of time. And the way to visualize that is to simply go look at total 3 minus USDT divided by Bitcoin, because I was being generous earlier. When I said that it goes between 25% and 1. When in reality, while you could draw it out like this and try to throw the altcoin market a bone, in reality, the altcoin market is collectively bleeding to Bitcoin. And you just draw a parallel channel, right? Look at whether you want to measure it from the highs or the lows, right? You can see pretty clearly that altcoins are bleeding back to Bitcoin over a long enough period of time. These are lower lows and lower highs. And so it is true that as more cryptocurrencies come into the space, there's more competition, theoretically. That's what people say, and that's why Bitcoin dominance, the Bitcoin dominance naysayers, that's why Bitcoin dominance will go down, is because there's so many more altcoins. But what I'm arguing is that there's a certain amount of money that goes into the altcoin market, right? Just because you print 1,000 more altcoins doesn't mean there's going to be more money that goes into the altcoin market. All that means is that there's less money to go into the other altcoins. Because if you expect dominance to go down forever, then, as I've said before, why was dominance unable to put in a new low despite the fact that stablecoin dominance went up a lot, right? So again, Bitcoin dominance put in a low and then it put in higher low. And stablecoin dominance was a lot higher over here than over here. So it should have been even easier for Bitcoin dominance to go below this low last cycle if the argument was that altcoins will take away from Bitcoin dominance over a long period of time, right? But because we saw last cycle that dominance put in a higher low, and we can pretty clearly see that alt Bitcoin pairs are in a macro downtrend, what it means is that over a long enough period of time, altcoins will bleed back to the king. And so the way to be successful in the cryptoverse is to value your portfolio in Satoshis. Because if you do not, then over a long enough period of time, you will watch the Satoshi valuation of your portfolio go down and down and down. It doesn't mean that you can't have occasional rallies like this, right? And let's look at those closely. You know the altcoin season that everyone wants? I'm not anti-alt season. I'm not. I'm really not. I love alt season because you can make a lot of money really, really quickly. And I have no problem with that. But when we think about when these alt seasons occurred, right? It was after QE, right? It was when we had well, I mean, in 2017, the Fed had just started, right? We had just started to increase rates, right? So if you look at interest rates back over here, you can see that in 2017, late 2017, like the Fed had just started to increase rates. But I mean, again, they were still relatively low, right? They were not that far off sort of the lower bounds there. But when these rallies occurred, it was from the lower part of this channel. And it was from much higher Bitcoin dominance levels. So again, I'm not saying that alt season can't happen. Think about how many times people have called alt season over the last 2 years. And again, you could easily point to any number of altcoins and say, well, if it's up 30x, is that not alt season? Yeah, I mean, for that altcoin, it probably is. But for the collective altcoin market, how do you get this move? How do you get the move where alt Bitcoin pairs rally 400%, right? That was a 400% rally. This is another 400% rally. How do you get that alt season where everything is going up 100x and not just the crappiest of crap way down the list on CoinMarketCap? How do you get those rallies where altcoins durably outperform Bitcoin to the tune of 400%? Because we have not seen that since 2021. And so that's why I push back against this altcoin alt season idea. I'm like, no, that is alt season. That is alt season. Where alts durably outperform Bitcoin to the tune of like 5x. This is not. This is the same pattern that we played out from 2018 until early 2021, right? Do you see that pattern? 2018 till 2021. How long did that take before the true alt season arrived? How long did that take? From that peak to that low, 157 weeks, right? From this peak to currently, we're at 130. Does that mean it'll happen after 157? I don't know. I really don't. It might, but I have no idea. That's still half a year away, right? It's still half a year away. Some people say, well, in half a year, your alt Bitcoin chart is going to look a lot different. I'm like, yeah, like it probably will. But that doesn't detract from the idea that it was smart to have Bitcoin in your portfolio for the last 2 years over a collective basket of 20 different altcoins, right? So how do you get to the alt season that everyone really wants and not just sort of the fake alt season? How do you get to the real one where they durably outperform Bitcoin? Well, I think you first see alt Bitcoin pairs go back down here, right? Look at Bitcoin dominance yearly candles, and it tells a fairly compelling story. Have you guys done that before? Look at Bitcoin dominance yearly candles. Red, green, 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 red, green, green, green. Maybe the next one's red in 2025. But what if this year is just another green year for dominance, right? What if it's just another green year for dominance? Remember, this red year here was 2017. This red year here was 2021, post-halving years. Again, Bitcoin's also put on a new all-time high before the halving for the first time ever. So I'm not here to say that it can't be different. In some ways it is. But anyone who has been on board the Bitcoin dominance train since 2022 started made the correct decision, in my opinion. Just like they would have made the correct decision in January 2018 to be on board the Bitcoin dominance train until the end of 2020. Right? So in the same way, the Bitcoin dominance train lasted until the end of 2020 in the last cycle. what if the Bitcoin dominance train this cycle lasts until the end of 2024, the end of the halving year, right? Which is exactly where it basically topped out last cycle, the end of the halving year. And then maybe in the post halving year, you see something different. I don't know. But I mean, again, this is, I still think, and again, I mean, if we go into a recession, then, I think all bets are off with the altcoin market. But until, I mean, if we get a soft landing, then you could see a repeat of sort of a normal cycle peak. And what I mean by that is there's like a camp right now that if you look at like the ROI of Bitcoin from the low, if you look at the ROI from Bitcoin from the low and you just compare it to the last two cycles, there's a lot of people saying that like we're, including myself, right, that we are pretty extended here. Do note that 2 cycles ago, we basically reached the same ROI from the low only another month or two from now. So in some ways, it's really not that different, right? In some ways, it's really not that different. But in other ways, we also know there's this idea of diminishing returns that from one cycle to another, we would expect some form of diminishing returns. Now, again, I'm already seeing the speculation pick up again where people are starting to say, well, maybe we don't have diminishing returns. And maybe we don't. But again, last cycle, my base case was diminishing returns. Everyone fought against that idea and they called for 300K. And we ended up getting diminishing returns once again. And so maybe if it's not broke, let's not try to fix it, right? I mean, diminishing returns has been happening for 4 cycles in a row now. Maybe cycle 5 will be also diminishing returns. But if it's going to be diminishing returns and we're already above the last 2 cycles, then that means we need some type of cool off period before we get out into the post halving year. So there's 2 thoughts, right? There's one thought of, maybe you get a left translated peak, or maybe it plays out like it usually does and it goes all the way out until 2025. My opinion is this. My opinion is that if we can cool off after the halving, then maybe there's a chance that it plays out like it normally does. And we just look at the last 2 cycles, right? Look at the last 2 cycles. Look what Bitcoin did. After it reached this level, after it reached sort of in this zone from the bottom, it basically went sideways until day 685. We're currently on day 480. So if we can cool off after the halving for 200 days or so, then it might play out like it always does. And once again, everyone's overthinking it. But what if it just continues to go parabolic and it doesn't get a pullback, right? And we just simply, because we broke the highs, we just go into mania. Then I think you have to argue that maybe you get some type of translated peak. I think a better way to visualize that is to look at the ROI from peak to peak rather than the low. And when you do that, you can see that last 2 cycles at this point in the cycle, Bitcoin was still 66% down from the all-time high. 66% down from the all-time high would put Bitcoin at 25K, which sounds absolutely absurd, right? It sounds absolutely absurd. I'm just telling you, that's where we were as measured from the peak over the last 2 cycles. And so if you were to have a cool-off period after the halving, you could have a massive cool-off period, and we're still doing what we've always done, just in a slightly different way, right? 2019 at one point got very far ahead of the prior cycle, and then it cooled off and kind of went back down to sort of mean reversion, right? So again, when you look at it like that, when you look at it like this, it certainly seems like we're pretty far extended considering the ROI, peak to peak ROI right now is 1 since we're at the all-time highs. Last 2 cycles, we were still 66% below the all-time highs, 63 to 66%, or 66 to 63, 63 to 66% below the all-time high. And if you measure it from the April peak, it kind of looks like we're not doing anything that different. And so, if it follows that or some evolution of that, even with diminishing returns, then you could get a left translated peak. And I think, like, as much as I feel like no one would want that, it's something that you have to at least have in your mind, right? That, if we don't cool off at all, then you could get some type of left translated peak that occurs in the first half of the year. But if we do get some type of cool off period, then then it certainly could play out like it normally does. One interesting thing to look at is look at the relative strength index. The relative strength index is pretty much useless, I think, to be completely honest. But I think it's useful in the sense that you can use it as confluence with other indicators, right? The weekly RSI right now is 88, 87, 88. The counterpoint is that, well, so what? I mean, in prior cycles, look at this. Like in May 2017, we were at 87 to 88. We pulled back to the 20-week SMA, and then we still blasted up a ton after that. So it's pretty much useless, I think. But if you look at the two-week RSI of Bitcoin, there's no doubt about that it's getting really far extended here, right? I mean, we're basically at or near prior peaks when it comes to sort of this downtrend trend line on the RSI on the 2-week time scale. Now, where it becomes not as clear is if you switch this to the monthly, it looks completely different, right? If you switch it to the monthly, it looks like you have plenty of room to move up. So what I'm suggesting is that what happens if, you get a kind of like 2013, right, where you get your first top, you get a massive pullback kind of after the halving, and then you go back up later, and then the monthly hits, right? And then the monthly RSI goes back up. But again, if we just stay manic now for the next few months, I would be forced to believe it's just a left translated peak. Because that's just what I think I would sort of defer towards in that case. So I think it really depends on what happens after the halving. Does the mania continue, or do we does the market cool off for half a year, and then we spend the next half year arguing if that was it or if we get another rally in 2025, right? My view is that that's going to be the next debate is whenever the cool down period comes, whether it's from 70K or higher, then we'll spend the next 6 months figuring out, is that it, or will there be something more than that? Gold, when gold ran the highs, it ran about 7 to 8% above the highs, and then it pulled back. So if you go look at gold when it first broke through here, right? It ran about 7 to 8% above the highs, and then it had a larger pullback. So if you guys remember, like we talked about, if it does go to 73K, I don't know if it will or not. I really don't. I'm not in the business of trying to predict where the top is, but about a 7% move would put it. Let me zoom in here. About a 7% move from the current price would put you at around 72K, 73K or so. And again, I think the question is that, at what level do alt Bitcoin pairs break down? I think that's kind of what it ultimately comes back to, is that it does it until alts finally break down on their Bitcoin pairs. And so, yeah, like that's what gold did, is it went about 7 to 8% above it, and then it had a pullback. I know some people have already started talking about, and I'm just going to go ahead and say it now, some people are talking about if there is a pullback, like if there is a pullback from either 70K or a little bit higher, kind of like gold, right? Everyone looks at gold and like, oh, well, cup and handle, right? If something like that does happen, then everyone will be talking about sort of that type of thing, where if it, sort of comes back down, maybe holds support, and then goes back up. And look, it could certainly do that, right? It could certainly do that. And I think we should be aware that that is a potential outcome. There's also a potential outcome where, Bitcoin sort of fades at some point after the halving, or maybe starts before, it sort of fades back into the 20-week SMA. And as it does that, as it fades into the 20-week SMA, kind of like it did over here, that's where dominance goes to 60%. And then from there, when it breaks below, assuming that it breaks below the 20-week SMA, then dominance could potentially top. And then if Bitcoin does come back down here, then you might start to see alt Bitcoin pairs find a bottom. And then the question is actually, can you go back up and put in new highs, or do you do something like this where you go back up and then a recession hits and then you just break all these levels and go all the way back down, right? That's kind of a scary thought, right? But it's a thought that you should have, right? I mean, 2019 was a massive rally up, same percentage that we just had, 350%, a massive rally up, a fade for 6 months, a move back up to make us think we were about to run those highs again, only for the recession to come. Now, it was a black swan. And I'm not suggesting that you take that black swan and say that it's going to happen again, but there's no denying that the unemployment rate is starting to show a little bit of weakness. And if you look at the unemployment rate, you can see that it's actually above the bull market support band. Not that that really matters, but when you look at say a 24 month moving average of the unemployment rate, look at this. Normally when it does that, it just keeps on going up, right? There's only one example that I could find in history where it breaks above the 24-month SMA, 1967 in recent times, and doesn't just keep on going up parabolically over the next year, right? So, you know, you can see right now, like it's going up quickly. The unemployment rate is well above now its 24-month moving average. The 24-month SMA is around 3.62, and it's now currently at 3.9. And history shows that once it gets above the 24-month moving average, with the exception of 1967, we just keep on going up. Now, what happens if you do get a case like 1967? What happened in 1967, right? So in 1967, the unemployment rate went from 3.6 all the way up to around 4, right? So imagine that. Imagine we hit 4%, and then imagine like the market sells off. and then instead of the unemployment rate continuing to go up, it then drops back down. That's how you could get, say, like a double peak, like if something like that were to happen, where it seems like it's going to break out, it hits 4%, everyone freaks out, and then it just kind of comes back down, and then everyone YOLOs back in once again, right? That would be sort of a 1967 type move. And by the way, in 1967, if you go look at what really happened in 1967, we had a market cycle top that occurred, or not, I don't know if you call it a market cycle top, right? But we still did get a slowdown in the economy, but it didn't happen until a couple years later from when that soft landing was achieved, right? So like 1967 was right here, right? This was 1966. So this was like October of 1966. Now think about October of 2022 when we put in a low. The S&P then rallied until December of 1968, right? So the equivalent, if we were to see something like that play out, would be we had a low in October of 2022, and then if it follows 1967, then it would mean going up until the end of the year, right? December of 1968, sometime after the election. And then finally after the election, everyone's like, all right, we have to let this thing run its course so that we can get inflation durably back down to target. And then you get something like that, right? Like that could certainly happen too. But I think the thing to consider there is that when the unemployment rate hit 4%, it had only gone to 3.6. We've already gone, and then it went down to 3.4. We've already gone down to 3.4, right? We've already gone to that 3.4 level. So that's why I'm not exactly sure that we need to follow the 1967 blueprint. It's possible that we do, but the counterpoint is if we do follow the 1967 blueprint and the S&P rallies through the end of the year, remember in 2019, Bitcoin topped 9 months before the S&P topped. Remember, Bitcoin topped in June of 2019, right? So it was 9 months later where then the S&P topped in March of 2020. So just because the S&P might rally doesn't necessarily mean that Bitcoin will or that crypto will. But a counterpoint to that is that now Bitcoin has exposure to traditional finance, to the spot ETF. So what happens if you get a situation where Bitcoin continues with the stock market, but the altcoin market doesn't keep pace? Just because it's doing the 2019 thing where altcoins just bleed back to the king, and maybe Bitcoin continues to go up with the stock market, but the altcoin market doesn't follow suit. So that's kind of, most examples on this chart, once the 24-month SMA is broken, we just keep on going up. The only reason I'm pointing out 1967 is I have to imagine that a lot of people thought back then that when it broke to 4%, that was going to be the end game, and that it was all, everything was done. And then we still saw the unemployment rate go all the way back down, put in a new low, and then it finally went up at the end, right? I mean, you can see it finally started to go up once we got into the post-election year, right? The year following the election, then the unemployment rate finally started to break up. One reason why I'm not that confident about a repeat of the 1967 scenario is because there's a lot of other labor market data that's already looking a lot weaker, right? And again, I mean, we don't really have access to all the data from back over there, but like some of the data certainly doesn't really look that great in the labor market, and then some of it looks okay. initial claims look great. I mean, like initial claims don't look like anything's wrong. You know, I look at initial claims a lot and they look pretty much fine, right? I don't know if I mean, this chart really starts back in 1967, right? And basically initial claims were right around where they are right now, right around the low 200s, right? If you go back and look, this was, and let me remind myself where the S&P topped, right? So it topped in December of 1968. So if you look at initial claims, you know, December 1968, it was all the way over here, right? So the question is do initial claims, you know, so this would be equivalent to the pre-election year. So we would be looking at it like right here. So like we're in March. So March of 68, if you're wanting it to follow the 1967 analog, right? It's now March of 2024. Initial claims were basically still trending down, right? And they were they were below 200K. They were still trending down. So if you get a situation where initial claims don't go up, then that's how the S&P continues to climb the wall of worry, right? If you go and look at it, and maybe we can look at a moving average of it, you look at a 14-week SMA, you can see that initial claims were pretty steadily moving down throughout all of 1967 and 1968, right? Initial claims were moving down. If we go look at it today, you can see that in 2023, so that'd be the equivalent of 1967, initial claims are moving up. And then now they've started to move down, but it seems like they're starting to level out. So it's not exactly the same thing, but there are some similarities that I think we should be aware of, right? So, you know, maybe you get some type of spike in the unemployment rate to 4%, but if it doesn't sustain that and it drops back below 4%, then maybe you do get a 1967 analog where the markets rally into the end of the year and then it sort of stalls out after that. And there's other examples as well, you know, following inverted yield curves. If you look at like treasury yield spreads and you look at all the prior times of the 3-month inverted the 10-year yield, the last time was obviously 2019. We're not going to look at that one too much because that was the pandemic. But if you look at say like 2000, right? I mean, you know, we had an inverted yield curve in in 2000, and of course we also saw a market top in March. In fact, of that rally, right? We saw Cisco top in March of 2000, and so that's something I've thought about as well. And I'm not saying Nvidia is following the same thing as Cisco back then. I mean, the price to earnings is different, but it is important to remember that Cisco, when it had that rally back in the .com crash, right, it did top out in March. And so one thing to think about is if Nvidia were to top out in March, it actually topped out like the last week of March. If Nvidia were to top out in March and then sort of come back down and then rally back up for a little bit, that could be an example like Bitcoin, where you see Bitcoin go back to its 20-week moving average, rally for a few months into Q3, but if it puts in a lower high, then that could be sort of how 2019 repeats itself, right? If you're not familiar with what I'm talking about, look at what happened in 2019, right? After it put in this top, Bitcoin dominance continued to rally until Bitcoin USD broke below the 20-week moving average. But that break did not occur until September, right? So it rallied until, dominance. If you overlay Bitcoin dominance onto the screen here, you'll see that load. So Bitcoin dominance continued to rally, and it topped out right when basically Bitcoin fell below its 20-week moving average, right? So we had a top in June just before rate cuts. Bitcoin USD kind of slowly came down with occasional rallies, and then by the end of the year, by Q3, it fell below the 20-week moving average, which marked the top for Bitcoin dominance. So if instead of following 1967, we follow something like what happened back over there, and Nvidia tops out in March or April or something, and then it retraces maybe back to its 20-week moving average or maybe below, and if it goes back up, that's where that breadth can collapse, right? That's where it's only like one or two stocks holding up the stock market, and then it comes back down, right? So that could happen. That could theoretically happen. But again, I don't know if it's going to play out like 1967, whether it's going to play out like 2000. It could also play out like 1947 or 1949. And in 1947 and 1949, or it was the 1946 to 1949 period of high inflation. So it's not like the 1970s. But what if you say it's more like the 1940s? If you go look at the 1940s and you see what was going on with the stock market back then, it was also during a period of high inflation that actually eventually led to deflation. You'll see what happened, right? So in that cycle, this was just after World War II, and I actually think there's more reason to believe that comparing to the 1940s is more relevant than comparing to the 1970s, because in the 1940s we just came out of World War II, a lot of spending to finance that war, a lot of spending to sort of fight against the pandemic. And so what happened back over there was that you also had high inflation. If you overlay U.S. inflation rate onto the chart, U.S. inflation rate year over year, what you'll see is that it also got sticky, right? Inflation did get somewhat sticky in this area, but then eventually it collapsed. And the issue with it collapsing was it actually went into a period of deflation. And then when it went into a period of deflation, the market actually put on a new low that it had put in back in 1947 1946, the October November low, right? You know how it seems like we get a low in the S&P oftentimes in October of the midterm year. Same thing happened over here in 1946, right? You got a low in October of 1946, and then you ended up getting a lower low in June of 1949. So that'd be the post-election year. But when did it top out? It did not put in a new high, right? It did not put in a new high, but this top occurred in June of the election year. Right. So there's like three different examples, right? You had the 1967 soft landing where the market rallied until December. You had the 1946 to 1949 hard landing where the market rallied until June and then had a hard landing in going into the end of the year. And then you had the .com crash where it rallied until options expiration in March of the .com crash, and then the S&P finally gave way as the unemployment rate really started to go up. So, and again, one of the things with all this stuff is likely none of them are going to play out. Like, I'm guessing that this cycle will not play out like 1967. It will probably not play out like 1949, and it probably won't play out like the .com crash. It'll probably do something different because that's what markets do. They change, they're dynamic. Nothing is exactly the same. There are certainly similarities in all the different cycles, but nothing's exactly the same. And so, with all that in mind, I think it makes sense to have a plan and stick with it. Now, my plan for the last couple of years, as far as crypto goes, is to just stay Bitcoin heavy because, and to occasionally take profits as we go up the wristbands, right? I don't really care about all the narratives. I don't really care about predicting everything. It's just as we go up the wristbands, I will take profits along the way. I'm not, I think it's okay to have a hodl stack, but, everyone that says that ends up regretting it normally a year later, right? So I'm not saying that you can't see Bitcoin go higher. It's just that, a lot of times when we get into this phase of like diamond hands and hodl stacks, those end up becoming memes about 6 to 12 months later. So I would look at all that stuff and just kind of keep in mind, various outcomes that could occur, whether it follows, other inflationary periods, whether it follows, sort of the .com outlook, or whether it just does something completely different and doesn't do any of that stuff. My main convictions continue to be that Bitcoin will absorb liquidity from the altcoin market. And so I think that a lot of exposure to crypto for someone who's more risk averse but wants to take on some risk is Bitcoin, because it still gives you exposure to the upside but minimizes your downside risk. And what I mean by that is if we do top out in March, or if we do top out in June before rate cuts arrive, right? 2019 we topped before rate cuts. June 1948 is when the market topped out too. So I mean, if we top out in the summer before rate cuts arrive or something, and you have Bitcoin and you write it down, I mean, the sort of the counterpoint is that while Bitcoin would take a pretty big hit and it could easily drop 50% or more under that type of scenario, the argument is that it would eventually recover. Whereas if that were to happen, a lot of the altcoins would not recover, and next cycle you would just have simply a new basket of altcoins that everyone will be interested in once again. So that's why I say thinking about altcoins in terms of their Bitcoin valuation will help to preserve the Satoshi valuation of your portfolio, because otherwise, while you'll see your Satoshi valuation explode at some points in the cycle when you have a true alt season where alts durably outperform Bitcoin to the tune of 400%, usually those gains are fleeting and they only last a few weeks. and then everything bleeds back to the king once again. So that's why I think it's important to value your portfolio in terms of your Satoshi valuation. You can have exposure to crypto via Bitcoin, but and if you want to have altcoins, of course, you can always speculate with them, but you have to be careful because if Bitcoin shows any weakness at all, the altcoin market will plummet, right? I mean, it will. I mean, if Bitcoin were to drop back to say like 40K, I think the altcoin market would get hit a lot harder. So that's why I think, taking those profits back to Bitcoin occasionally, or even USD is not a bad way to go. I think the hard part is that when you're in parabolic rallies like this one, anyone who sells anything is then mocked forever, or at least for the next few months as Bitcoin continues to rally, right? So like, if someone sold all their Bitcoin at 30K or 40K or 50K or 60K, they just get dunked on. And reality is according to the risk metric that I follow, it called for basically taking 1/10 of the Bitcoin stack off the table around the spot ETF. And the reason I say only 1/10, a lot of people are saying, well, why not take more? Right? I mean, a lot of these institutional products have marked tops for Bitcoin. The reason was because the risk, right? The risk on Bitcoin at the time was only it was only in the 0.6 to 0.7 risk band, right? So in the way that I do it is it's 1/10 between 0.6 to 0.7, 2/10 somewhere between 0.7 to 0.8, 3/10 between 0.8 to 0.9, and then the rest of it between 0.9 to 1. That doesn't mean that you can't have a hodl stack that you treat differently. And in fact, that's probably a pretty good idea in case all the models break, right? All models are wrong, some are useful. But that's the idea, right? 1/10, 2/10, 3/10, 4/10. That way, you're fine if the market corrects after you sell, but you also have some incentive for it to keep going up. And by the way, when that did happen, the selling sort of into the spot ETF according to the risk model, when we actually came back to 39K, I said on ITC Premium back then that if you did sell into that higher risk level, this could be a good point to actually buy back in case we do get that rally into the halving and in case that USDT dominance falls back to 4%. So all of that has worked out in the short term. But I've made plenty of mistakes along the way, right? I mean, like I make tons of mistakes. I'm trying to learn from them. Some of the mistakes that I've made were, back over here, I thought that in September, I said I think that Bitcoin's going to drop below its 20-week SMA in Q3 of the pre-halving year, like it always does, right? Like it always does. Q3 of the pre-halving year, it tends to always drop below its 20-week moving average. That's happened legitimately every single time. And so I said that, and I was right about it, and I felt pretty good about it. But then I said I think it's going to go out. I think it'll go to 23K before getting a bounce, right? Now what's fascinating is it went down to 24. I mean, I think I remember a low there. Yeah, 24.9, right? So it didn't go to 23K. It went to 24.9K. And now it all kind of seems silly, right? Like it kind of seems silly. But again, like I as I said back then, right, I don't base it on these price predictions. I base what I do based on the risk levels, which have nothing to do with what I think is going to happen. Because if anything, I think we all learn at some point in our investing journey is that you cannot possibly predict where the markets will top out or bottom out. And so, yeah, like that was a mistake. Like I thought we would go to 23K and we didn't. And then we went up. I also thought we would have a few more red months in 2023. So again, another mistake, right? I'm not going to hide behind him. I know I could try, but the receipts are there. I make tons of mistakes, right? Tons of them. The things that I've been right about are Bitcoin dominance up, right? Eth-Bitcoin down, gold building up to this breakout point, USDT dominance going to 4% or so. And in terms of crypto, but I've made a ton of mistakes, right? Like there's, Bitcoin in Q3 of 2022, I said that the low could be, we could have a low in Q4, or we could have a lower low if a recession happens, right? That's what I said. And, because I said that, everyone has constantly said for the last year, well, but you said we were going to have a lower low. No, I said we could have a lower low if we go into a recession, right? We could, right? Again, like it doesn't have to be the most likely outcome. It's a possibility, right? It's just like a sort of a vague possibility that could theoretically occur if the Fed goes too high for too long, right? It's not like it's that outlandish of an idea. But again, I was open to the idea of if you don't have a recession, the Q4 low could be the low. if you don't believe me, like crazier things have happened. You guys remember the Cisco chart from earlier where we put in, I mean, look at this. Like, and again, like it's crazy when you think about it, but you guys remember Cisco, the dot-com crash where it bottomed out here in October of 98. And then what happened? We had a recession where it went back down. Do you see that low from October of 98? We took out that low in October of 2002 of the following midterm year, 4 years later, in a recession, right? In a recession. But look what happened in between, right? I mean, Cisco rallied from that point. It rallied 700%, right? Cisco rallied from October of 98 till the peak in March of 2000. It rallied 700%. And then eventually it put in a new low, right? So yes, I'm going to stick with what I said back then, that Q4 2022 could be the low if you don't have a recession. If you do have a recession because the unemployment rate goes to like, 6 or 7% or something crazy, then yeah, like it's possible. I mean, if it can happen to this generation of investors over here, why can't it happen to us? It doesn't have to happen. And even this low occurred in 2002. That would correspond to 2026, this cycle, right? It would correspond to 2026. Again, no guarantee that it plays out like that. Again, I'm guessing that the Fed will try to turn on the money printer well before something like this were to happen. So it very well might not happen. My only point is that if it has happened in history to prior investors, why do we assume that it can't happen to us? That's the only thing I go back to. So yes, it's possible that the Q4 low, right? As I said back then, right? It's possible that the Q4 low is the low, or if you get a recession, you could have a lower low, because that's what recessions do, is you put in lower lows. But again, I mean, like it's not really a hill I want to die on. It's a reminder that crazier things have happened. And by the way, this 700% rally by Cisco from October of 98 until March of 2000, would you care to guess how much Nvidia has rallied from October of 2022 until March of 2024? Would anyone care to guess how much it has rallied from that low from October 2022 to today? Guess what? If you had two guesses, you don't need them. About 700%, actually a little more than 700%, about almost 800%, right? But over 800, almost, in the 700% range over the exact period of time from October of the midterm year to March option expiration, which occurs in like a week or two of the election year. Same type of percent move, same type of time frame. The main counterpoint to that is that the price to earnings of Nvidia, I don't think, is nearly as extended as it was for Cisco back then. So it's not an exact comparison, right? It's not. But what is similar is the type of move that has occurred, right? The type of move, and over a very similar time frame. So I guess when you think about all this, like when it comes to the S&P, like I don't really have a crazy strategy. I just DCA it when it's below like 0.7 or 0.75 risk. Right now it's above that, right? Right now the risk levels on the S&P are above that, and they can frankly stay above that for a while, if history is any indication, right? I believe the risk on the S&P is somewhere between 0.8 to 0.9, but history shows, it's 0.851. But history shows that you can stay above that level for a while, right? Over here, we stayed above 0.8 to 0.9 for many months before we ultimately saw the risk sort of fade back down for a little bit. So, but then if you draw a trend line across the screen, you can see there's other periods, right? Even going to the .com crash, where the risk level in the S&P went into that sort of level. And you can see that actually it went into that level, way before then, like all the way back in 1996, I believe. You can see that it wicked up into the 0.8 to 0.9 risk band. So there's a lot of things to consider here, right? I mean, the market can stay irrational far longer than anyone can stay solvent. And I'm not asking you to go out with leverage. I'm not saying you should short the market. I think that if you short the market, you're probably going to lose a lot of money. I don't short the market. I basically just buy at low risk levels and occasionally sell at high risk levels. And I try to keep my head down other than doing that. That's what I do. I don't ever short the market. I don't even long the market. I don't even use leverage. Crypto is already volatile enough that it's essentially using leverage already, especially if you go into the altcoin casino. If you can get 1,000% gain in a week, you can also lose 100% in a week too. You don't really need leverage for crypto. It's already operating. I mean, it's not exactly right, but and a lot of people will sort of post their gains and stuff with all the leverage, but again, like a lot of people will end up losing money doing all that stuff. So I don't promote that stuff, right? I don't think that leverage is the way to go. I think that you need to have another strategy where you're not using leverage, not financial advice. That's just what I found useful for me. And you stick with that. It's okay to keep one foot in the market in case we keep on going up, right? And I've said that forever. Despite all of my views on Bitcoin over the last year, the only things that I've done on ITC Premium that I've published, right? The only things with Bitcoin, just for full transparency, so that everyone knows. I think it's important to understand my bias so that you get insight into what my views are. If I don't tell you what I've done sometimes, then maybe you're like, well, he's, like maybe if I sell something and then I post bearish content about it, you can be like, all right, well, he just sold. That's why he's saying that. But if I didn't sell and I'm posting it, then maybe it's more worthwhile. But look, I mean, the only thing I posted about Bitcoin in terms of what I've actually done with my portfolio was buying over here, all in ITC Premium posted between 15 to 21K. And then I took some profits right there. And then after taking profits right there, I said, hey guys, that might be a good area to buy back in at 39K, especially if we rally into the halving. That's literally all I've done. And here it was 1/10. It was 1/10. To me, that strategy is a good strategy. For some people, no. It's just you have to hold everything until Bitcoin tops. And we've already entered into the window. We've already entered into the window here where if you go look at the Bitcoin risk levels, we're in the 0.7 to 0.8 risk band, right? And the 0.7 to 0.8 risk band ranges from 66K to 81K. So for me to follow my dynamic DCA strategy, it would mean selling 2/10 of my Bitcoin somewhere between 66K and 81K, implying there's maybe like a 20% chance that that's the top. And if you go higher than that, 0.8 to 0.9 risk is 81K to 99K. Coincidentally, 0.9 risk is right around 99K. What's really funny is that 0 risk is 12K and 1 risk is basically 120K. There's like a 10x difference there, But yeah, I mean, that's where we stand. And I think that whether we play out like a normal typical cycle with a peak in the post-halving year will very much be dependent on what happens following the halving or going into the halving. If we stay manic well after the halving into the summer, then, and especially into Q3, Q4, then I think it's going to be a left translated peak. If we cool off, kind of like the 2-week RSI was showing we're due for, if we cool off over the next 6 months and we get like let's call it like a mild recession where like the unemployment rate kind of goes up above 4%, and then everyone freaks out that it's going to go to like 8%, but then maybe it tops out at like 5% or something. If it does something like that, then maybe you just get a sort of a lull in the market, and then you get another move later on, right? I think it makes sense to not marry either idea. I have no idea which one's going to play out, and maybe you get something completely different, right? Maybe we just top out now, and that's it. Maybe because that's what happened during the .com, right? We topped out in March of the election year, and then that was it. So maybe that's what happens. But I think you have to have a plan, right? If you don't have a plan, and then or what happens a lot of times, people have a plan and then they change it during the middle of the mania phase because they're like, oh, well, crap, BlackRock's buying Bitcoin, right? They're going to buy all the Bitcoin up. And they think that it can never drop again. And so they decide not to go with their plan. And then they end up basically watching their portfolio go from being up several 100% and then crashing back down. What an interesting comparison might be is looking at the Qs. I've talked about this before as well. If you look at the QQQ, what you will note is that after it launched near the end of the .com rally, it launched in March of 99, and QQQ rallied until March of 2000. So it rallied for a full year. And what's funny, and I pointed this out before, is that it launched at around 48, and Bitcoin Spot ETF launched at around 48K. And it rallied up to 120 and then crashed down to 20, right? Imagine how crazy that would be if Bitcoin did that. If it had a left translated peak this year where it rallied north of 100K, only then go back to 20K by 2026. Think about how hard that would be. Now, a counterpoint to that is that I doubt when QQQ came out, it spent a year just trying to get there, right? I mean, I imagine there wasn't as much issues getting it launched as there was for the Bitcoin spot ETF. So you could argue that the Bitcoin spot ETF was getting priced in before it arrived. But again, I still don't know if that's true, because look what happened after it launched. I mean, billions of inflows, billions of dollars of inflows. So that's probably not even the best comparison. But when it launched, it was March of 99 until March of 2000. So the Bitcoin spot ETF launched in January. So let's say you get a cool off period in the summer, right? And then the unemployment rate pulls a 1967 on us, and then hits 4%, and then it goes back down, and then maybe you get a 2013 style double top where it does something like that. The thing that I come back to, that I can't escape from, and I know I don't even read comments anymore, because I know that when I talk about it, everyone's like, well, he shouldn't focus on the macro. The thing that I can't come back to, that I always come back to, is that there's really not a thing as a soft landing. That's kind of and again, like, you might say, well, isn't that kind of like being hypocritical, because you just said that 1967 was a soft landing. And that's true. 1967 was a soft landing. But we still had a top in 1968 of the election year, and we still got a hard landing, right? I mean, we still eventually got a hard landing, even though we avoided it initially, right? Even though we avoided it from October of 66 until the end of the election year, where the S&P rallied, by the way, 50%, we still eventually got a hard landing 4 years later, right? And so again, looking at it today, from these lows here, the S&P has already rallied about 50%, right? It's already rallied about 50%. So like in 1967, it took until the end of the election year to rally 50%. We're already at the 50% level. The S&P is already there almost. I mean, 50% would basically just be going to 5,200. We're within strike. We already went to 5,189. So when I look at that, and I think about, like, is it a soft landing or not? Even in the examples of prior soft landings, they still eventually ended up being hard landings. And I think the reason, if you think about it, I've always wondered, like, what it was like during .com. I think this is it to some degree. People talk about, like, the animal spirits back then, right? How many times have you heard, like, the animal spirits back in the .com crash? Is that not what we're seeing? Like, I mean, are we not watching gold break out, telling the Fed that they've gone too far, at the same time that risk assets are rallying a panic rally where Bitcoin pairs still need to break down? Is it not kind of all lining up, and maybe we just refuse to believe it? Are JPEGs not starting to sell again for hundreds of thousands of dollars? What are the chances that in 10 years we look back on this and say, why were JPEGs selling for hundreds of thousands of dollars, right? What are the chances? I think they're pretty high. And I think the unfortunate reality for crypto investors is that you can make a lot of money in crypto, but it's the froth that does not come from Bitcoin. Bitcoin is not responsible for all the altcoin crap that gets created. Not all altcoins are crap, just most of them. But all the altcoin crap that gets created, Bitcoin's not responsible for that. So I'm not going to blame Bitcoin for that, right? But there's no denying that people are using the Bitcoin rally to sort of promote all these altcoins. And it's that froth that the Fed is trying to get rid of, right? It's all that excess. How do you get people to go back to work, right? I mean, one of the issues has been just job participation, right? How do you get people to go back to work so that the supply of workers does not exceed, by a lot, the supply of available jobs? How do you get that to happen? You make it so that JPEGs no longer sell for $500,000, right? You make it so that you make people have to be more productive. You have to get to a point where it's more worthwhile for someone to go get a job than it's just sit around and trade JPEGs all day. And again, I mean, I say this as someone who loves the Cryptoverse, right? I love being in the Cryptoverse. I love talking about crypto. I love making money with crypto. But I also kind of recognize that it's the froth that we see not only in crypto, but also in equities that the Fed has been trying very hard to sort of get rid of. And that's my fear for a lot of people that are making a lot of money on these micro caps is that, it's all fun and games, but just remember, take your profits along the way, because if you don't, you probably will regret it in the future, right? You probably will regret it. And I'm not saying, one great thing about like dynamic DCA is that like what a lot of people do is they think they get to this point where they have to sell everything, right? What happens if you don't do that, right? What happens if you sell a small amount so that you're incentivized for it to continue going up because you still have some, but you're not actually devastated if it goes down because at least you took some profits. That's the whole idea behind dynamic DCA, right? It's the whole idea behind it. So just something to remember, right? Is it's impossible to time this stuff. I'll be the first to tell you that. In fact, honestly, to be completely honest, I think as far as trading is concerned, I think there's a lot of people out there that are way better than I am at trading. I'm more of a long-term person where I again, like I told you guys earlier, the only thing I've really published as far as trades and ITC premium over the last year with Bitcoin is buying over here and selling 1/10 right there. I mean, that's like all I've done. It's not that complicated. And the only thing I've done with Eth-Bitcoin is I made 3 trades that I advertised pretty clearly on ITC premium. I traded here and here and here back to Bitcoin. So I traded a lot of my ETH right there for Bitcoin. I traded a little bit more right there. That was probably a mistake because it was pretty close to the low. And then I traded more at the merge. So I did 3 trades of ETH to Bitcoin right there. And today, all 3 of those trades are doing pretty damn well. But it doesn't change the fact that on X, on every single low or high, people dunked on me. And I look back on it, I'm like, well, it wasn't wrong. It was right. It was just that, you had to wait a while for it to play out. But here we are. And, now what's fascinating is that 0.057 is considered like FOMO when that used to be considered fear, right? Like it was only a few months ago when that would have been considered awful for it to be at this level. Now, when it's at 0.057, everyone's losing their minds again. It's the same thing. It's just the same thing over and over and over again. So yeah, we'll see. I still think that Bitcoin needs to break these alts down. Dominance still needs to go to first 56% and then ultimately 60%. I think once it's at 60%, that's at 60% dominance is where breadth becomes too narrow, and that's where it becomes an issue, right? Is at 60% dominance. That doesn't mean you top at 60% dominance in terms of either Bitcoin dominance or Bitcoin USD, but I do think that at 60% dominance, that's when breadth is too narrow and you can no longer kind of ignore it. And the issue is that when it becomes too narrow, so if you think about like why Nvidia is doing well compared to the rest of the asset class, right? It's because it has a great cash balance. It can survive whatever's coming. When the Fed cuts rates, there's going to be a redistribution of where wealth is being put into these equities, right? Because at that point, people might start to think, all right, now that we're going back to looser monetary policy, we don't have to pile into the 5 names that have good cash balances. We can pile into all these other names, right? That doesn't mean that the USD valuations of those companies can't go down, but what it means is that if Nvidia is responsible for 17%, I believe, of the gains by the S&P since the bottom, what happens if it has a big pullback, right? What happens if it has a big pullback? That's what could take the S&P down, even if some of the smaller stuff are going back up, right? The S&P could still go down. So again, the S&P loves climbing the wall of worry until either the inflation rate goes back up or the unemployment rate goes up. We haven't seen inflation go back up. Unemployment rate, it is going up, but it's still not at 4%. And I've said before, I think that 4%, I think that's the magic number. I think 4% is where the market will pay attention. We're not there yet, right? We're not there yet, but it's probably not that far away. We could hit 4% next month or maybe May. It could be May when we hit it, but it's probably coming relatively soon, given the fact that once the unemployment rate starts to move higher, it really starts to move higher. And in some sectors, the labor market, I'll do a full video on this, but we did just get out a lot of labor market data this week. Hires are in a slow downtrend, right? I mean, they're still above where they were back over here in like 2006, but not that far away. So, I mean, if the Fed really wants to try to engineer a soft landing, they probably should pivot, honestly. And I mean, it's weird for me to say that because I've been in the higher for longer camp, and I honestly do think that higher for longer was the right play. The problem is that there is really a lot of weakness starting to show up in some sectors of the labor market. And my concern for the economy is that they are going to push it until they see weakness in the labor market. But by the time they see weakness, it's too late. Look at job quits. Look at the job quits rate, total non-farm. It's collapsing. It's absolutely collapsing right now. Look at it in retail trade. It's back near the pandemic low. I mean, no one's quitting their job anymore because I think they feel like they can't find a job. A counterpoint, though, is if you look at the job openings per unemployed worker, it is still well above 1, right? It's at 1.45. So until that goes below 1, you could argue there really shouldn't be any big fears, right? Because there's still, technically speaking, according to the data, whether you believe it or not, there's still technically more open jobs. There's still more available jobs, or there's more job openings per than available workers, suggesting that there's still some reason for wage inflation to go up because there's just not enough workers to choose from. And so it's still an employee's market. I think it's going to shift over to an employer's market, and I think we're kind of in the process of that shift, right? I think we're sort of slowly transitioning from an employee's market to an employer's market, but we're kind of in the middle of it right now. But maybe by 2026, it'll be fully shifted over to an employer's market, which, I mean, I'm not saying is a good thing. I mean, again, I think an employee's market is probably a better thing. I think everyone almost prefers that. It's just that's kind of what's happening, is that we're shifting away from an employee's market where any worker can basically go to any of these tech companies and demand all sorts of things to be hired, to then an employer's market where then the candidates have to convince the company why they should be hired rather than the company convincing the worker why they should work for them. So I think we really swung really far in one direction in 2020 through 2022. And now through 2026, we're going to swing in the other direction. Because I do think the Fed is probably going to hold rates too high for too long. That's kind of my base case. And it's not, I don't really blame them for it. It's just that, history shows that in order for inflation to durably come down, that's just what has to happen. Because us animal spirits in the cryptoverse can't help ourselves. We can't help but bid up JPEGs and altcoins and microcaps. We just can't help ourselves. And that's what ends up inducing it, is because, you have the wealth effect, you have inflation staying sticky, and then the Fed stays too high for too long. So all the froth over here, retail workers pay the price because, I mean, they don't, it's not like they are out here trading JPEGs like the people in the cryptoverse are, but monetary policy still affects them. And one really interesting chart is if you go look at like the S&P divided by M1. If you look at the S&P divided by M1, there is a huge drop, and everyone keeps like talking about like Bitcoin divided by M1. But I want to point this out: you cannot really use M1 in the same way that you used to because the definition changed, right? The definition of it changed, so you cannot say, "Hey, this is as important." And the reason I say that is because if you go look at Bitcoin divided by M1, right, you can see that we're already above the 2021 highs and above the 2019 high. We're still below the 2017 high. But the caveat is that the definition of M1 changed in 2020. So if you were to take this bar pattern and shift it up to where it was, right? Again, I don't know how you would draw it exactly. You can see how it would look a lot different, right? So I don't think you can really take this stuff to the bank with regards to M1 just simply because the definition of it changed. Now, miraculously, despite the fact that the definition changed, the low from 2018 was basically the same low as 2022, and the high from 2019 was basically the same high as 2021, despite the fact that the definition changed. But again, I'm just saying that could just simply be a coincidence, right? It could just simply be a coincidence. And if we were to see it rally up to where it was in 2018, right, it's still a ways away from that. I don't know if it's going to go all the way up there, but it still would require higher prices by Bitcoin to get back to where it was in 2018. And it's the same thing, like the same thing if you look at Bitcoin divided by M2, right? If you look at Bitcoin divided by M2, you can see that it's already run the highs. But if you look at, say, like the NASDAQ divided by M2, I'm not really sure what, yeah. So if you look at the NASDAQ, maybe log scale is better. I'm not sure what that trend line is. If you look at the NASDAQ divided by M2, you can see that when people talk about like what was it like during the .com crash or during the sort of the mania phase back then, I'm like, you look at this chart, this is probably what it was like, where the unemployment rate was going up and people were just bidding up .com companies no matter what. So yeah, I mean, look, we're kind of close here. So the NASDAQ from that level back then, it rallied another 15% before it topped out, which is kind of crazy, but it rallied. And I don't know if it's going to do that again or not, but it rallied another 15%. Just to give you an idea of what a 15% rally would be for the NASDAQ from this level, 15% puts you at 21,000. 21,000. It always comes back to 21, right? With this is Bitcoin, right? But yeah, I mean, that just kind of shows you just kind of where we are and how hot the market is. But the great thing about markets, and it's sort of like, a blessing and a curse, is that when they get like this, they don't have to be rational. The unemployment rate could go up and doesn't mean the market has to crash tomorrow. It can go on for months, right? Sometimes gone on for years before anything really changed. So I wanted to come on here, talk about crypto, talk about the stock market, talk about the Fed. I don't dare read the comments because I know many of them are not going to be very nice, but I will stick with my strategy of that I've talked about for a long time. And I know everyone's like, well, why don't you buy alts? Like, why do you just stay with Bitcoin? It's because I think Bitcoin will survive whatever hell is coming for us over the next year or two, right? Whatever hell we go into, I think Bitcoin will eventually survive it. I don't know if scam coin 597 will, or scam coin 3032, right? I don't know if they're going to survive, and I don't want to concern myself if they're going to survive. I think Bitcoin will survive, right? And Bitcoin could go higher before all that stuff happens, right? It could go higher before all that happens. And I talked about earlier that I think there's definitely a chance that we stay risk on until 56% dominance, risk on until alt Bitcoin pairs break down, risk on until gold breaks out. Well, that's already happened. Risk on until fear and greed index is the 90s. Well, that's already happened. Risk on until USDC dominance at 4%. Well, that's happened. But you could have some wiggle room there all the way down to 3.75, right? So some of the things we've talked about have already happened, and then some of them have not happened. So it's kind of like we're kind of in between, where like some of them have triggered, but then other ones have not, sort of suggesting that there's a reason that Bitcoin could continue climbing the wall of worry in order to break those alt Bitcoin pairs down. But I'm also not under the illusion if Bitcoin were to just crash, without going up to much higher levels, I still think alt Bitcoin pairs would break down. I know that they normally break down on Bitcoin rallies. And so that's why I bring that up, is that historically alt Bitcoin pairs break down on Bitcoin rallies. And then after they break down, then Bitcoin rolls over and then crushes the altcoin market, like the cockroaches they are. But the great thing for everyone here is that cockroaches, you can't really ever kill them, right? They still will come back in the next cycle and you can make a lot of money on them. But that's where I think we stand with the Cryptoverse. I think that Bitcoin rules the asset class. I think liquidity is flowing back to Bitcoin. I do think Bitcoin dominance will go much higher. I could be catastrophically wrong about that. And I try to think about, and there's a lot of people that I respect that don't think any of that's going to play out. They don't think that alt Bitcoin pairs are going to break down. They think that Eth-Bitcoin is going to rally up to new highs, and that maybe ETH even flips Bitcoin. But I got to say, I'm not in that camp. Like, I do not think Ethereum will flip Bitcoin probably ever, right? Probably ever. I just don't. I think Bitcoin is the better asset, frankly. I think you can make a lot of money with ETH, and I like ETH. I'm a tech guy. I mean, I did my PhD in nuclear engineering, right? It's not like I don't understand tech. I like the Ethereum ecosystem, right? I do. It's just that I think Bitcoin is better, right? And again, I know that's a controversial view, but it just is. I mean, and again, it's not. I do think that proof of work has sort of proven itself, and I don't really think proof of stake has yet. In fact, since the merge, ETH Bitcoin has just been bleeding. I don't think it's been bleeding because of the merge. I think it's been bleeding because we are in quantitative tightening, and that's what it does during QT. I think we're going to find out once we go back to QE whether proof of stake is ultimately sound long term or not. I think that Bitcoin has already proven that it is. I think the altcoin market still has a lot to prove. So that's why I prefer Bitcoin over that stuff. That's why I prefer it. And again, I mean, I do like Ethereum. Don't get me wrong, I do, but I like Ethereum more when it's not bleeding to Bitcoin. That's the issue, right? Like, I like it more. And if you go back, to that heat map, right? If you go back to that heat map that I was showing you guys earlier, with the unit of account as being Bitcoin over the last year, ETH is down 18% against Bitcoin, right? So I know my views are controversial about ETH bleeding back to Bitcoin, but at what point do we just say, like, it was the correct view that ETH was bleeding back to Bitcoin since the merge? It's down 33%. I like ETH, but I like it when it's not bleeding to Bitcoin. When it's bleeding to Bitcoin, I like Bitcoin more. When we go into this phase, I like ETH, right? Because then I'm taking on more risk, but I'm expecting a higher return, right? For the last year, I refuse to convert my Bitcoin to ETH because I feel like I'm taking on more risk to be in Ethereum and I'm getting less of a return for it, right? So why would I be in ETH if Bitcoin is outperforming it? So yes, I like Ethereum when it's not bleeding to Bitcoin. When it's bleeding to Bitcoin, I'm just going to treat it like every other altcoin. I'm just going to say, yeah, it's great. It's holding up in the same way. In the same way, there's a lot of altcoins that are bleeding to ETH, right? Look at ETH over the last year. There's a lot of altcoins that have bled to it, but there's more altcoins that have bled to Bitcoin than have bled to ETH. And you could even look at actually the Ethereum ecosystem on here if you want to. We have some different things that you can look at, and it kind of shows like the ETH ecosystem and what's going on there. But so please don't mistake my sort of pessimism about ETH Bitcoin as being anti-ETH. I just think that if you're going to hold an asset that is underperforming a lower risk asset, then what are you doing, right? Why not just hold the lower risk asset and enjoy a higher return where your downside risk is minimized? Because if Bitcoin were to drop back to 30K or 40K, Ethereum is much lower, right? Than the 50% drop that Bitcoin would have, right? It would be much lower. So yeah, I think the way that I navigate it is, I buy Bitcoin at low risk levels. I occasionally sell it into parabolic rallies, and yeah, that's what I do. And I have no idea how high it will ultimately go. And my thing that I'll just sort of go back to, and it'll sort of be like the crutch about it is until alts break down, there still is reason to believe that there's liquidity from alts that can go over to Bitcoin in addition to the spot ETFs, right? So until alts actually break down, there is still liquidity over there. But the hard part is that, degens are going to degen until they can't degen anymore. I know, because I used to be one of them. In 2019, I was that guy. I was the guy, going full degen on alts over Bitcoin, only to watch alts break down against Bitcoin. We'll see. We'll see what happens here. The thing is like, if the more that alts keep knocking on the door, I feel like the door is going to open, right? All it takes is a strong move. One strong move by Bitcoin, and alt Bitcoin pairs break down. One strong move is all you need. You don't need, a 10-month rally for alt Bitcoin pairs to break down. I mean, that could happen, right? But you don't need that. You need one strong move by Bitcoin to break alt Bitcoin pairs off support. We've knocked on the door once, twice, 3 times, 4, and 5. We've knocked on the door 5 times. How many more times do we knock on it before it finally breaks? How many more times? I don't know. But I do think it will eventually break. And then alt Bitcoin pairs will come back down into this zone over here. And then at that level, alts will probably find some type of bottom against Bitcoin collectively. And again, some of them already have, right? I mean, I'm not under the illusion that no altcoins have bottomed against Bitcoin. Some of them surely have already bottomed against Bitcoin. But I'm talking about collectively, right? Collectively, I think that alts could still go lower on their Bitcoin pairs because I just think Bitcoin will continue to sort of absorb that liquidity as long as the Fed stays higher for longer. You know, and look at gold. I mean, it just keeps on confirming the breakout. It's now at 2189. Again, when it broke out over here, the clock was ticking for Bitcoin. It had like another week or two before it was done. So, you know, the rest of March could be pretty chaotic, and even April, right? It could be very, very chaotic. And I imagine there'll be a lot of volatility over the next couple of months. So maybe you get some type of you know, the excitement continues until the halving, off and on, some type of summer lull. Then we spend the summer discussing, is there going to be another move later on in the year or 2025 or not? I look forward to that. But that's where we are. Those are my thoughts on the market. We've been going for over 2 hours. Oh, wow, there's 5,000 people watching. Okay, so I guess some people want to hear my often wrong thoughts. But those are my views on the market. And I will, I guess we'll wrap it up. I don't know if there's any questions. By the way, we do have ITC Premium at intothecryptoverse.com. Sales still going on, so make sure you guys check that out. Links in the description below if you guys want to check that out. You don't have to. There's also a free tier, which will give you some access to some of the charts. And honestly, if you're new to crypto, I would not recommend signing up. I think that if you're new and you just want to learn about crypto, there's so many better ways to learn about it than signing up for that kind of thing. I mean, you're probably just better off just DCAing into stuff that you want to DCA into over years. But if you want it, it is there, right? Like we do have that stuff available if you're curious. Intothecryptoverse.com. All right. Any questions? Here's a question. Where'd it go? I just saw it. Someone says, hey, they showed up late. Can you summarize this live stream in 2 minutes? Bitcoin dominance is going up is how I would summarize it. And I would just say that Bitcoin dominance is going up. I don't really know how else to say it, right? That's just what I think is going to happen. And the implications of that on the USD pairs are very uncertain. But I think Bitcoin dominance is going a lot higher. That's how I would summarize it. And I'll move on from that. Do I think ETH can survive a recession? Yeah, I do. I do. I think that it can. I'm not sure about like a lot of altcoins, but I think Ethereum could. I think Ethereum, honestly, is way better than most every other altcoin. I mean, I think there's a couple altcoins that are kind of come within like striking distance of like sort of being to the level that Ethereum's at, but I still don't think they're at the level that Ethereum's at. I think that Bitcoin and Ethereum are the two most massively decentralized protocols, and I think they are in a different league than everything else. I think Bitcoin really is in a league of its own, but then I think that if you are a little bit more flexible on that league, you can also include Ethereum in it, but I still think Bitcoin's in a league of its own. I think Ethereum has a blue chip. I think it would survive a recession, but I don't know. A lot of altcoins probably won't. Okay, that's my view, especially the meme coins. I mean, some of the altcoins surely will, but a lot of the meme coins, that stuff probably won't. But yeah, I do think Ethereum would survive if we get a recession, right? Again, there's no guarantee, and again, even if there is one, it could still be years away if it's 1967-esque. But I think Ethereum would survive it, even though it might not be obvious at the time. If Eth-Bitcoin were, you know, at like 0.03 to 0.04, then I might start to get interested in Ethereum from like its Bitcoin valuation point of view. That doesn't mean that it can't go lower on its USD pair at that point, but I think from its Bitcoin valuation, it could become starting to get attractive. When Cisco is at all-time highs, were financial advisors recommending allocating 1 to 3% like they are right now with Bitcoin? I have no idea. I do know that, like, if you look at sort of the dominance of Cisco, or like basically the percentage of the S&P that was taking up, it's very, or the Nasdaq or whatever, right? It's very similar to what Nvidia is doing today. Like, it's all very, very similar. I think there are differences, with Cisco and Nvidia. I do think it's, while I think certainly Nvidia is in a bubble, I think Cisco's bubble was even more pronounced at the time, given where its price to earnings ratio was. I don't think the Nvidia price to earnings ratio is as extended as Cisco's was. With that said, it doesn't mean that it can't play out. It doesn't mean that price action can't eventually play out in the same way. It's just that I don't think it's, from the price to earnings point of view, it's not as extended. In terms of the price appreciation, it's gone up more than Cisco did from the October of 2022 low compared to 1998. One thing to remember about altcoins, please keep this in mind. Please keep this in mind, is that most of them are created to make the founders rich, right? If not all of them, most of them are. That doesn't mean that you can't make money on them. It doesn't mean that there's not good ecosystems out there. There are, and I've talked about a lot of them before, but you have to be careful, right? You have to go with the ones that stand the test of time from one cycle to another. One way to get insight into that is look to see which altcoins are putting in new highs from one cycle to another, right? If there's an altcoin that put in a high in 2017 and then put in another high in 2021, then that's at least some evidence that that ecosystem might survive. Like, it's not just a one-off thing. The problem with most altcoins is that they're like a one-off thing where, like, a founder creates that, they pump it up for 2 years, they sell their stack, and then they move on to something else. So if you're getting into the altcoin market, hey guys, by the way, the altcoin market's fine. I'm not anti-alts. It's just I'm pro Bitcoin in a Bitcoin dominance rally. What's the big deal about that? If I were anti-altcoins, I wouldn't have a website with literally thousands and thousands of charts on altcoins, right? I mean, you can go to the asset filter and type in like hundreds of different altcoins, and each of these altcoins will have a ton of charts associated with them, right? It's just that I want people to respect the Satoshi valuation of their portfolio and to recognize that over a long enough period of time, your altcoin will likely, unfortunately, bleed back to the king. And you can respect that and you can play that to your advantage, or you can ignore it and watch the Satoshi valuation of your portfolio go down from one cycle to another. Just be careful. Where are we with the SOM indicator? So they're referring to the SOM rule recession indicator. So the SOM rule recession indicator, it went up a little bit with the last unemployment print, but it's still low. I mean, it's still only 0.27%. The recession indicator is when it hits 0.5%. But normally, once it hits 0.5, the recession has already been underway for 2 to 3 months. This is all, I believe, coming from the creator of it, Claudia Sam. Right now, if you look at it at the state level, it's already triggered in some states, but the counterpoint, right? The counterpoint to that is that it wasn't fitted for the state level. So while I'm showing the SOM rule for the state level, it wasn't fitted for that, right? So if you look at like California, it already triggered long ago. If you look at District of Columbia, it already triggered, but it's starting to come back down here. And there's definitely some false signals with DC. So I'm not asking you to take that one to the bank. And I mean, some of them, if you go look at like New York, it's pretty close to triggering, right? It's at 0.433, right? So it's getting close, but it still hasn't happened yet. And you can actually look, instead of going through all these, we can look at the number of states where the SOM rule has triggered, and it's going up, right? And it also went up in 2023, like late 2022, it went up to 13. Right now it's at 18, right? And it's still potentially trending higher, especially considering that the unemployment rate just printed at 3.9%. I mean, that has to mean that collectively there's states where, the unemployment rate's going up. So this triggered at, and this hasn't been updated yet. Like, we should get an update relatively soon on this, in the next few days, I think. But the last print was 18, right? It was 18. And my guess is that it's going to continue to go up. And then you can see like, what it looks like compared to all these other periods where it went up. Maybe you get a case where it puts in another local high or something, in the next month or two. You can see over here that it topped out in November and December, right? This data point right here is from December. So we should be getting another data point relatively soon. But that'll be the thing to look for is it, does it continue to go up or does it kind of stall out again and initial claims start to trend back down? So yeah, right now it hasn't really triggered. And if you look at the recession risk dashboard, the only real main risk right now that's highlighting any concern is the interest rate risk. Everything else still looks relatively subdued, right? Production and business risk is low. National income and product risk is low. Employment risk is low. The counterpoint, of course, is that, well, it's from a low point where all that stuff will take off from. But the counterpoint to that is it can stay low for months and months, if not years, before moving in the other direction. How's retail interest? Yeah, if you go look at retail interest, there's definitely some people coming back right now. We're at 0.352 risk on the social risk, so there's definitely some people coming back. Which again, it's somewhat concerning because they're coming back at a time where the unemployment rate is starting to move up, and at a time where gold's breaking out, and at a time where we're nearing all Bitcoin pairs breaking down. So it seems like they're coming back at maybe like the worst possible time. But who can blame them? That's when they normally come back, is in parabolic rallies at the worst possible time. That's normally when retail comes back. Sometimes they take the market to much higher levels. Other times they just take it up slightly higher and then we fade. So, it really depends. Someone says, please treat altcoins like a public toilet. Get into your business, get out. I didn't say that. I know you're putting my quote, my thing around my name around that. I didn't say that. I said that about exchanges. I said treat exchanges like a public toilet. Get into your business and get out, right? Don't just hang around an exchange and keep your crypto there. Just get in, do what you need to do, and get out. And don't hang around there longer than you really need to, right? I don't think anyone goes into a public restroom and just hangs out there. Don't go to a public exchange and just keep your crypto there, right? Like, that's kind of the idea. Get in, get out, get into your business, get out. What is the Bitcoin high for this year? Currently 70K. I think we hit, are you saying what I think it's going to go to? I have no idea. Currently, we're at 70K. Currently, we earlier today, we hit 70K. So that's the current high for the year. I have no idea what the high for the year will be, but that's what the current high is. I think whenever this manic period is over in the next month or two, I'm guessing there will be a pullback in the market, but I don't know from what price that corresponds to. Could be from 70, could be from like the mid 70s, could be higher, right? It really depends on how aggressive these degens are going to keep degenning into alts. I think that Bitcoin needs to break those alts down, and I don't, because alts keep trying to keep pace with Bitcoin has to keep going higher in order to break them down. Advice to newcomers: you are late, very late. Something happened yesterday. I was on the phone with my mom, and she said, hey, did you see that Bitcoin is at 67K? Now, I want you to think about that. And this is someone who like never talks about Bitcoin. Like, think about that, and you tell me if that is something that you hear in an early part or a late part of a parabolic rally, right? Again, that doesn't mean it can't go higher, because in 2020 and 2021, people were talking about it for months before it topped out. But again, more and more of those comments are starting to come in, right? Where people are saying they're starting to get, messages from their friends and their family, and yeah. But again, like, what usually happens when retail comes back, they buy and the price keeps going up in the short term. And because of that, they then buy a lot more. And then they keep buying a lot more because they only see it go up. And then one day they wake up and their whole portfolio is down 50%. That's what normally happens, right? So it can be a mistake to assume that just because retail shows up that you have to have a crash immediately. Oftentimes retail shows up and they send the price even higher, making all the people that bought lower surprised at just how high it goes, because they always and including myself, right? It's easy to underestimate, retail FOMO when it really kicks in. And my view for a long time has been, once those alts break down in their Bitcoin pairs, that should be all she wrote for the altcoin market for a while. Who knows how high Bitcoin has to go in order for that to happen? All right. I don't know. We've covered a lot. We've been going for almost 2.5 hours. I do appreciate you guys tuning in. If you're here, give the video a thumbs up if you can. Subscribe if you're not subscribed. Again, we do have ITC Premium if you want to join that. Can you explain how you chosen 60% as your target and why you think it looks to be on the multi-year downtrend that dates back to 2017? It's a good question. So, and again, I'll try to go through it because you have some fair points. So what they're saying is that there is a trend line going back to 2017, which has marked potentially the top of dominance, right? So I don't know if you want to draw it like that. It's hard to say, exactly where that top is, right? So if you connect that peak there, you can see that we're struggling to break through that. So that's what they're referring to, is that trend line there. And there's a chance it doesn't break through. But I will remind you that, back over here, everyone was saying that we wouldn't go above the 200-week SMA because we just kept getting rejected by it over here. And now we've been above the 200-week SMA since October and then held support at it in January. So I think that we will break through that trend line, because my understanding of the market, which could very well be wrong, is that if you can't put in a new low on dominance when stablecoin market cap, or when stablecoin dominance is like 5 or 6% with all the QE, maybe it suggests that dominance is an oscillator. Now, if dominance is an oscillator, then that means it could theoretically go all the way back up to 70%, which is not my target. So then how did I come up with 60%? The way I came up with 60% was two ways. First of all, a lot of times when you get bubbles in the altcoin market, or when you get a lot of times you get bubbles, they will return to where the bubble started from. So the bubble in the alt Bitcoin pairs started right here at 60%. That's where alt Bitcoin pairs broke down. So that's why I think we're ultimately just going back up to where they broke down from, 60%. Okay. When you look at like Eth-Bitcoin, right? If you were to pull up Eth-Bitcoin and show that chart, where did the bubble really start? Right? Where did it actually start? It didn't start at like 0.01. Like the bubble by Eth-Bitcoin did not start here, which is why I don't think it's going there, right? I don't think Eth-Bitcoin is going back to 0.015. I don't think it's going back to 0.02. I think the bubble started right here at 0.03, which is why my target for Eth-Bitcoin is between 0.03 to 0.04. That's where I think the bubble started, at 0.03 to 0.04, and that's why I think it'll go back there. The other reason is if you look at the fib retracement tool from the breakdown here, you can see that Bitcoin dominance retraced to the 618, right? That's where it ultimately topped out at. And then if you look at it this cycle, from where dominance broke down from this level way up here, if you go to the 618, it puts it at 60%, right? At 60%. So that's the reason why I think dominance is going to 60%. It's where the breakdown point was. It's where the fib retracement puts it at. I also just think fundamentally, until we go back to QE and a pivot, I think alts are going to bleed back to Bitcoin. So my bias on dominance is higher until proven otherwise, right? If we go back to QE and lower rates and dominance is trending down and we didn't hit 60%, then I'll be like, all right, we might not. But until we go back to lower rates and QE, dominance, I think, just keeps on going up, and 60% seems like a reasonable target. Someone says, could a recession take Bitcoin dominance to 70%? It's possible. I mean, I honestly, it's really hard to think about 70% dominance, like the destruction that would mean for the altcoin market. But my target is not 70. My target is 60. I think that's a fair target that allows altcoins some wiggle room to maybe bottom out against Bitcoin, but it's not too aggressive like 70. I'm I'm open to 70, but I think 60 is kind of the target at which point I'll become, more neutral on it and not really have as strong of opinion. Like at 60% dominance, I might just say, all right, that's kind of I rode the dominance rally. Does it go higher from here? I don't know. But that's the reason, my target is 60, not 70. Do you have any expectation for QE later this year? You might have it later this year. I don't think it's going to come, in the next month or two. I think they're going to keep trending that down. And remember, last cycle, dominance topped when QE returned. So, if it takes them until like September, maybe dominance keeps going up until September. If they switch to QE in June, maybe it goes up until June. I don't know. I just think that dominance will go up until we see some type of shift in monetary policy. I don't honestly, I don't even remember. I think there's different tiers, and on the website it shows you what tiers correspond to what things. Someone says Bitcoin dominance looks more like distribution to me. Look, guys, the last thing I want this to be is an echo chamber. And I said earlier, I know a lot of people are saying this looks like a distribution phase on dominance, and you could be right. Like I don't want to say that you're wrong because I have been wrong about things in the past, and so like I've learned my lesson to not to be open minded that. So yeah, like I have a strong opinion, but I'd like to think it's loosely held. I mean, if prove me wrong, right? Prove me wrong on dominance. Show me something different than the uptrend we've been in, and I'll switch. I'll switch my view. But my view continues to be, for the reasons I've explained, why I think dominance is going higher. And I kind of think it's just building up here, right? Like it seems like it's just sort of building up here to a potential breakout sometime in the next few weeks. Consolidation also looks like distribution till a resolution. Yeah, that's correct, right? I mean, like it can look like, distribution. Actually, back in 2020, I did a video on Bitcoin when it was here, and I was actually very bullish on it back then. To move a lot higher when it was right there, and people said that was a distribution phase, and I said no, it's an accumulation phase, right? It was the same thing, right? It's like it looks like a distribution phase until you have a resolution to it, and then it could end up being just a reaccumulation phase, and it was. So yeah, like it's possible that dominance is in a distribution phase, but I would also argue that it's also just as not, if not more likely, considering where we are with monetary policy, that it's in just a continued accumulation phase, and people are still converting their alts back to Bitcoin. And sometimes it doesn't even have to be alts converting to Bitcoin. It's just that there's more money going into Bitcoin, and altcoins just can't compete. If you have all these spot ETF flows with Bitcoin and you don't have the same thing with the altcoin market, maybe they just can't compete. And that's why they break down. Not because everyone's converting their alts to Bitcoin, but maybe because Bitcoin's going up on its USD pair and some of the altcoins just aren't keeping pace with it. Why is Rivian up? There was some news recently. I mean, there's been some hype recently about it. I don't know. I mean, I said before I would expect the Rivian Tesla valuation to bounce because we were back to the range lows, right? And it looks like that happened. I mean, I did a whole video on this on EVs. Basically, no one watched it because you guys only ever care about the crypto videos that I put out. But we did a whole video on the Rivian Tesla valuation saying that it was likely going to get a bounce here because it was back to the June 2023 low. So whatever comes next after this, it was basically like, hey, I don't know if it's going to eventually break this, which is probably what it's going to do, or if it will get a durable bounce. But whatever, that it'll continue to lead much higher. But whatever happens in the long term, in the short term, it's likely going to bounce at the range lows, just like alt Bitcoin pairs bounce at the range lows, right? So just like alt Bitcoin pairs just bounce at the range lows, Rivian Tesla bounced at the range lows. I'm telling you guys, there's something to it. There's something to looking at high risk asset valuations against low risk asset valuations during high interest rates and quantitative tightening. There's something to it. It tells you if you might get a bounce or not, right? If or the probability of a bounce is quite high if you're back down to these range lows that have been holding for half a year or more. So yeah, I mean, look, it's gotten a bounce in the short term. Whether it's sustained over a longer period of time, I really don't know. I mean, it's basically been in a macro downtrend. When Rivian IPO'd, I said over here it was way too expensive. That was back at 130. Now it's at $13. I mean, it's literally an order of magnitude less. If you want to take a bet on Rivian, I mean, you could take a bet on it. I mean, who am I to stand in your way? There's a chance that it doesn't go bankrupt. If it goes bankrupt, then you're throwing your money away. If it doesn't go bankrupt and it survives, then maybe there's some upside there. I know they're burning through a lot of cash, and I don't think they're profitable yet. Yeah, I mean, if you look at their cash flow, they're still cash flow negative. The counterpoint is at one point Tesla was cash flow negative too, and then it turned around after 7 or 8 years, I believe. So I don't know if they're going to survive or not. I think like Lucid and Rivian, I think the cars look interesting, and it'd be nice if they could survive because it'd be great for competition. But I don't know. I mean, I've also heard stories about how when people go to dealerships and they buy EVs, it's basically Tesla or nothing, right? They're not as interested in these other cars. So I don't know if they're going to survive. I hope they do, but I don't know. And the Rivian USD valuation has had plenty of bounces through here, and I remember when it was back over here at $12. In fact, it was the same price as it is today. I told someone, I was like, look, Rivian's at 12. I think it's going to bounce. And it did. And I didn't buy any, right? I didn't. I thought it was going to bounce at 12. I was like, it was not public, and I didn't buy any. So it's not like I made any money on the bounce either. But I thought it was going to bounce because it had been sold off for so long. I was like, it seems like it's due for a bounce. And it got one. And despite the fact that it went up more than 2x, it still went down and put in a lower low, right? And again, now we're at the same price that it was back over there in the summer of 2023. So it got a bounce. It 2x'd, and then it still put in a lower low. It's like Bed Bath & Beyond. Think about how many bounces it had before it went bankrupt, right? I mean, and these were like 600% rallies, 400% rally, right? A 200% rally. Still went bankrupt. I don't know. This is why investing in these smaller companies are so hard, because there's a chance that you're just throwing your money away. You're throwing it into a black hole that never comes back. That it never comes back from. There's also a chance you pick out a company that doesn't go bankrupt and you buy it at the time where it seems like it's the most bleak thing in the world. So, I think one of the reasons why I think that the Rivian valuation was bouncing some was because, the markets kept anticipating lower rates, and so it occasionally bounces, but then the lower rates keep getting pushed further and further out, and then sort of the reality sets in of, all right, well, that demand's not coming back as soon as people thought, and then it goes and puts in a new low. So you have to be careful with it. It's been a really difficult asset to trade, because I mean, essentially, if you had not even looked at this chart for the last 2 years, you've only recently missed the last low by like a week or so, right? You haven't missed anything, right? And if you're feeling FOMO, I mean, it was at $10, right? I mean, now it's at $12. At the peak, it was at like 170. It was at 179, and now it's at less than $13. It just shows you how much froth there can be at these mania phases back that we had in 2021. Litecoin update. So Litecoin is a great example of a coin. I don't know what I'm doing. Is a coin that just bleeds back to Bitcoin, right? And there's some Litecoin bulls. I used to like Litecoin back in 2017. I actually did pretty well with it, but I have a rule, and I don't apologize for my rule. First of all, I will say that this is a bleeder. Litecoin is down 97.6% since 2013. Does it get some pretty crazy rallies sometimes? Of course. I'm not saying that it can't, but it's down 98% almost against Bitcoin over the last decade, right? So if you were just buying something and sitting on it, for the next decade, would you prefer Bitcoin or would you prefer Litecoin? Now, there's some people that'll be like that. Oh, well, now this is the time it's going to bounce and it's going to go put in new highs. I'm not saying it can't bounce. I'm just saying that any bounce will just be a lower high, right? But I have a rule when it comes to altcoins. If the founder sells their entire stack, which is what happened with Litecoin back in 2017, or if the founder steps away for whatever BS reason they want to give, then I'm done with it. I don't really care what their excuse is. If you don't believe in the project to own some and you're the founder, then why in the hell should I care about it? That is my rule with altcoins. So if you ever hold an altcoin and the founders are either excusing themselves to go work on a different project or selling their whole stack and giving you some garbage reason why they did so, for me, that's the biggest red flag in the world, and you should be running away. And that's what I did. With Litecoin. And when that happened, I ran the other direction and I haven't looked back. And I just pick on it now because I'm like, look, if you can give me whatever garbage reason you want to why you sold, but I don't care. Your actions speak louder than your words. If you don't believe in it, then why should I? And this goes for a lot of altcoins. Like a lot of altcoins, this chart is very, very similar for. So yeah, if you're watching, guys, I'm so out of touch with the altcoin market right now. Like it's not even funny. I'm so out of touch with it because I've gotten into this Bitcoin dominance space in my head where it's almost like I'm blocking out everything in the altcoin market just because I'm so convinced that dominance is going up. I'm just like, I don't care. But I will say, if you are in the altcoin market, which I know most of you are, and that's fine. I think it's fine to speculate as long as you understand the risk. I would just say look around. If the founder is just dumping on you, what are you doing? They literally just minted it out of thin air. They printed it out of thin air and they're dumping it on you. And you're just smiling every step of the way. Right? Like wake up, right? If you have an alt and the founders are just dumping on you, what if you were in their shoes? You'd probably be laughing your way to the bank. You printed it out of thin air, and then you got all these retail investors just buying it up from you. And you just you went over to, you just created a contract, threw up a WordPress site, and called it a day. Yeah, I'm not saying that alt USD pairs can't do well if Bitcoin does, right? This person, as a smart person, can learn. Yeah, if Bitcoin goes up, the altcoin market can go with it, right? I mean, it's not that they can't. It's just that the only reason the altcoin market is going up is because Bitcoin is. It's not the other way around. I'm not saying you can't make money on alts, but I don't think you can blame me for saying, hey, Bitcoin dominance is going to go up. Some alts will outperform. I don't care about that. I want to maximize my risk-adjusted returns. I want to go with a king because it will survive likely a recession if we get one. It will more than likely survive over the altcoins. You can blame me if you want to, but it's not. I mean, that's my view. And I was clear from a long time ago that some alts would outperform Bitcoin. Most have not. The better strategy, in my opinion, for most people has just been stay with Bitcoin and ignore everything else. And yes, there's some alts that are giving insane gains, but the ones that give insane gains can also just quickly take those back. So please, if you're laughing at me, if you're dunking on me about the altcoin stuff, that's fine. Just please remember, occasionally take profits, because if you don't, then what's going to happen is 2 years are going to go by and your altcoin is going to be putting in new lows against Bitcoin, and you're going to be wondering how you watched it come and go and you didn't do a damn thing to save that money. So be careful. What do I think about Matic? I think that, in the same way that Eth-Bitcoin, a weekly close below 0.049, could sort of set up the end game for Eth-Bitcoin, I think the same thing is true for Matic, but it's true for below 1,722 sats. So a weekly close by Matic below 722 is sort of a warning sign that you could then enter the end game of Matic Bitcoin devaluation until it finally bottoms, right? And for the people that have criticized me on Matic Bitcoin, I've seen so many people doing it over the last 2 years. Guess what? It put in a new low this week. A new low this week. So that's the crazy thing about this altcoin stuff, is that literally people will call the bottom every step of the way. And then whenever it gets a bounce, like here or like here or here, they say Ben was wrong about it. And then it just keeps on putting in new lows. And so that's why it's so hard to talk about altcoins, because no one's forgiving about it. Like they'll call the bottom on this stuff for 2 years straight. Anytime it bounces, they'll go dunk on me, and then it just goes and puts in new lows, and then they go back into the they scurry back into the bushes to come out next week when it gets another bounce. So I think that if it gets a weekly close below 722, I think that you really should be cautious with it, because that's below support, right? The low over there was 1722. You might say we're at 1645. Yeah, but the close last week was at 1726, right? Look for a weekly close below 1722, and then I think things could get pretty dicey. Some analysts say next target for Bitcoin is 83. I have no idea. I honestly, when it comes to Bitcoin USD, I would defer to other people than me, is my view. I would defer to other people. I have no idea where it's going to go. Absolutely no idea. I think that if it goes much higher, I will take some more profits, but I have no idea how high it's going to go. Absolutely no idea. And I'll just stick to the risk levels, and the risk levels, we're currently in the 0.7 to 0.8 risk band. We could go higher, or we could top out here. I don't know where it's going to top. I do think that alt Bitcoin pairs will break down, and it's normally these Bitcoin rallies that cause them to break down. So however high it needs to go to break ETH Bitcoin off support and alt Bitcoin pairs off support. So if you're looking for confluence, maybe look to these other people, see what they're saying, and then see, like, when it hits that level, if it does, where do alt Bitcoin pairs stand? Or what happens if alt Bitcoin pairs hit before or break down before those targets are reached? Then those targets might be too optimistic. Someone says the MVRV score is the same as the 2019 local top. Let's go take a look. MVRV score. It's a little bit higher, actually. It's a little bit higher than the 2019 top. And then here's just the MVRV score, not the Z score, but just the MVRV. I mean, it looks like it's slightly higher than the 2019 top. Chainlink update. Chainlink is one that, if you look at its Bitcoin pair, it had been showing some strength, but it just got rejected again, right? I mean, and I don't know if it's just running the low here to just spike back up. That's always a possibility, but it hasn't really been able to durably break out of this range. So I don't really have any strong opinions on it. And it looks like the ETH valuation did something very similar too, right? Like the Link ETH valuation sort of looks like it just went up here and put in a double top. So I don't know. I mean, it's done triple tops before too, and then faded. Yeah, I don't know. I mean, it had some strength, but it seems like it lost a lot of that strength recently. Do I still stand by Blade? I don't know. Dot hasn't really been. If you look at Dot Bitcoin, I mean, look, if it can hold this low, if Bitcoin rolls over, then maybe there's something there. But if it can't, I don't know. I don't know. Maybe it's just a bleeder. I mean, what is there to say? I mean, like, if it breaks this low, what is there to say? Right? I don't know. If you look at .eth, it looks pretty bad too. I mean, like, .eth valuation. maybe it bottoms. Like, I don't know, like maybe it's trying to bottom here. I would say what you want to look for is, whenever there's a larger correction by Bitcoin, whenever that is, who knows when the hell that's coming, but whenever that is, does Bitcoin hold the lows or not? And if it doesn't hold the lows, then I don't really know what there is to say. What about ADA? So when it comes to ADA, my view is that so there's two ways to look at it. There's the optimistic way and the pessimistic way. Typically with alt Bitcoin pairs, I lean towards the pessimistic way. It's just who I am, right? So the pessimistic view is essentially that it's going to 400 sats. That's the pessimistic view. That's been my main view for a long time. I could be wrong. Everyone's also looking at this trend line here and saying that that's what's going to hold. My view is that no matter what happens, and I've said this for months now, my view has been that no matter what happens, it's likely going to fade back into 800 to 900 sats. And from there, we're going to find out who's right. Okay. So if it can hold this trend line at 900 sats, then I'm wrong about it. Okay. And I'd be happy to admit that. But if it can't hold it, then I think 400 is inevitable. It's just a matter of does it hold or not. I don't think it will. I really don't. It could. I could be wrong. I have no problem being wrong about it. But if you go look at the ADA ETH valuation, it was holding its lows for a while and it still broke, right? I mean, you could look at like the ADA ETH valuation and draw a very similar trend line and see that it held for a while, right? It held this trend line for a while here, but it still eventually broke down. And the problem with ADA ETH is I did videos about this. I said, look, when ADA ETH was down here, I said it's likely going to rally back up to the sort of the midpoint, right? I mean, you can redraw this parallel channel to make it, fit this a little bit better. But the whole idea was like when it was down here, I said it's likely going to rally back up to sort of the midpoint of the channel, and it did. But then after it got to the midpoint of the channel, I said, look, it's probably just going to go back down again. And, this ADA ETH valuation that topped in April 2019, a few months before rate cuts, I think this is the same thing, right? I think it's topping a few months before rate cuts arrive. And then it's probably just going to bleed back down to the bottom of the channel. And then maybe it comes back up, does something like this, and then later does something like that. But the problem, as much as I talked about Cardano last cycle, the problem is that it looks to me that it's bleeding against ETH. I don't control the chart, right? Don't take it up with me. Go take it up with Cardano. If it wants to turn it around, it needs to stop bleeding against ETH. Because the problem is that if you buy ADA over ETH, it's almost like the expectation is that over a longer period of time, it's just going to keep bleeding to ETH. So I'm trying to be open-minded. I honestly am. I'm trying to be open-minded about it. But it's still bleeding against ETH. And if it doesn't hold 900 sats against Bitcoin, then you go back down to 800, and then below that, it's potentially a 50% drop to 400 sats. It shouldn't be that surprising if that happens. I mean, ADA has been unable to keep pace with Bitcoin. You want to see an interesting chart? You know how everyone's talking about like ADA USD and how it's gone up recently. But look at this chart. This is a very telling chart. Look at ADA USD, right? Now overlay ADA Bitcoin to it. Overlay ADA Bitcoin. What do you notice? ADA Bitcoin topped out here, even though ADA USD swept the high. Look at this closely in 2019, before rate cuts. ADA USD topped in April. Then it went down and then put in a higher high. But ADA Bitcoin topped in April and did not go back up. What do you notice happening this cycle? It's the same damn thing. ADA USD topped. It went down and put in a low. It has come back up and put in a higher high. But despite the fact that it's putting in a higher high, ADA Bitcoin is bleeding, just like it did over here. It's bleeding. How is it not the same thing, right? How is it not? ADA USD is only going up right now because Bitcoin is going up. And that's clear by the fact that ADA Bitcoin is bleeding. So if Bitcoin were to drop at all going into the halving or after the halving, where do you think ADA USD goes? I'm not saying ADA USD can't go higher. Hell, if Bitcoin goes to some of these price targets that people have, ADA USD probably would go higher. But the problem is that it's only going higher because Bitcoin is. Just like in 2019, late business cycle before rate cuts, the only reason it was going up and swept the high was because Bitcoin was going up. But ADA Bitcoin had already topped out months before, just like ADA Bitcoin here potentially topped out months ago. How is it any different? I don't think that it's any different. I think it's the same thing. I think it's the same thing. Um, what other questions do we have? What about Solana? Solana's had a pretty impressive rally this year. The only thing I would say about it is, on his Bitcoin pair, it's done pretty well, right? If it can hold at 20,000 sats, then that probably bodes well over the medium term. But it looks like it's kind of struggling to hold that. If it drops below 20,000, I think your next stop is 12,000 sats. So if below 20, I think you go to 12,000 sats. Sol ETH maybe is a double top, honestly. Look at Sol ETH. Right? You have a top and then another top. Is it just kind of bleeding back down slowly against ETH? You see how Sol topped here at 5,500 or so on its ETH valuation here again, 55, and then it's just kind of bleeding back down. Is it just doing the same thing? I don't know. There are some alts that kind of do this thing, and then after they do it, then they get another spike up above the trend line. Everyone then FOMOs in, and then it collapses. That also does sometimes happen. So I'm not married to this idea, but it is potentially a double top. But that's certainly not a hill I'm going to die on. I don't really care if it gets another pop up. I think it would be short lived, and I think it would still fade back in because I do think Ethereum is going to retain its value against Solana. I don't think that Sol will gain on it forever. I do think that at best, I think at best Sol ETH is an oscillator, is the way to phrase it. At best, I think it's an oscillator. Do you still believe in diminished returns given the ETF inflows? Yeah, I do. Last cycle, everyone said that diminishing returns aren't going to be a thing because of all the institutions pouring in, and we still had diminishing returns. So I do. I think eventually we'll go off on some different track. But maybe that different track doesn't actually happen until after some type of like recession, right? Like I think a recession could actually reset things. I don't know when that'll occur. But I think once the economy really goes through something like a full business cycle, I think that kind of resets things, and then I think we might just go off on some different path after that. I do think Bitcoin will survive. I mean, I think a recession would only make Bitcoin stronger, frankly. But I don't know. I have no idea when that's going to occur, and I mean, Bitcoin could still rally, and it's still. I mean, again, I know the macro doesn't really look that great. The unemployment rate's going up. Things don't really look that great. But remember, markets can stay irrational for a long time. BNB. Yeah, I would sort of defer to the BNB Bitcoin valuation. I don't really know if a triple top is a thing. It kind of looked like it could be, but it is struggling to break through that level, like BNB Bitcoin. So if this just ends up being a lower high, then I think you're just going to revisit back down here to 5,000 sats. Someone says, but this cycle we hit all-time high before the halving. This cycle is different. Yeah, look, I mean, we hit a new all-time high before the halving. That's never happened before. As I said before, I think this cycle is throwing us a curveball. It's going to keep us guessing every step of the way, to some degree. My base case is that as I said a few months ago, is that we rallied to 56% dominance. We then cool off for a while, and then we see if the Fed engineered a soft landing or a hard landing. Is it better to take profit now on alts or not? I have no clue, man. Because the thing with alts is that, you know, half of them could drop a lot and half of them could go up a lot. I mean, there's no way to know. It depends on every specific altcoin. There's no way to know. And I'm not going to offer you financial advice on what you should do with your altcoins. People are very, very, very attached to their altcoins. So do whatever makes sense for you. I think over the long haul they bleed to Bitcoin, but in the short term, you know, who knows, right? I mean, they definitely can get rallies against Bitcoin, but over the long haul they bleed. All right, guys, we're at the 3-hour mark. I'm not really sure what we're still doing here, to be completely honest. We saw the all-time high at the beginning of the stream, and here we are 3 hours later, and not really anything has happened other than Nvidia sold off 5%. But you guys know my thoughts. Those are my thoughts. Could be wrong. Probably will be wrong about half the stuff anyways, but those are my thoughts. Hopefully they're useful to you guys. If you guys like the content, subscribe, give the video a thumbs up. Again, Into the Cryptoverse Premium at intothecryptoverse.com. Link to the description below. I just put it in the comments as well. Again, there's a free tier. You don't have to pay a thing to join the free tier. And in the free tier, there's at least something there. And there's also a newsletter that we put out each week, so you guys can check that out. Again, I mean, that's what I run, and we have a lot of people that work on the website, like software developers. It's certainly not just me, but that's the way that I can do this. I mean, before all this, I was working at a national lab, and then I decided to come be a degen in the Cryptoverse, and here I am. Right here I am. But yeah, I mean, at least these are my thoughts on the market. I do often get things wrong, but my opinions are not paid for, and they will never be paid for. So please give the video a thumbs up, subscribe. I'll see you guys next time. Bye.